All right. So CFA level 2 ethics. Now, although ethics is absolutely similar to what is in level 1 with respect to the codes, the standards. Okay. Now, there are some differences which I have highlighted in this section. First of all, what is your official index? As per the CFA Institute, the CFA level 2 ethics has three sections similar to level 1, that is codes and standards. Correct. In this, they have discussed the basic thing. Plus, individually about each standard, the guidance is discussed in the second reading. And then there are some of the examples that they've discussed in the application part. Application part is just where the examples are discussed. Now, what I have done is that in our notes, the section will be divided into two parts. Everyone, I hope everyone can see these two parts. These two parts are separated for a reason that one part considers what exactly is similar to level 1. So, whatever is similar to level 1 will be in the first part. Now, what is not similar, that is in part 2. So part 1 and part 2, where is the difference? Part 1 is something that is similar. Now, those who have already seen my CFA level 1 notes, I have summarized the entire CFA ethics into all the standards into a couple of pages. Like instead of reading the bulky notes, you can refer this to quickly revise. So this is around 20 to 30 pages. That is the first part, which is exactly similar to your CFA level 1. So I've just added my CFA level 1 notes because that is the bare minimum. You have to go through all the standards once again, right? Now, many students ask me about CFA Institute and your material. I say CFA Institute is very in-depth. I personally studied CFA Institute material. It's a bulky material, but it gives you the understanding of their language. But those who want to understand in a summarized way, so I've done that in level 1, and many of you have studied my level 1 notes and have studied from me, so they know the content. But again, I've added that in part 1. So I'm assuming when we are doing today part 2, I'm assuming two things are done. One is that you have covered the basic ethics from part 1, right? Gone through all the standards. Then we do have to cover a couple of vignettes. Yes, you have to test a couple of vignettes. We've solved around 5 vignettes as an example to get a hands-on about what CFA case studies format is. That is just to get a touch. However, once you go through that, right, there are a couple of more, but before you do that, that is where we will today understand what is this supplementary part, or what is this exactly supplementary notes that I've added here. This is where I have added L2 ethics supplementary book. Under this, what are minute differences in the strategy or ideology about CFA level 2 ethics? Those doubts, questionnaires by students, or observations by me when I go through the questions, what are these observations that I have summarized in this? But again, this has to be done after you've completed or you have revised the basic standards once in part 1. So after you are done with part 1, then as I said, couple of vignettes you've solved, and then probably you can come to this in this part 2. So we will be beginning with the part 2 section, right? In this part 2, what we are going to do is that we are going to one by one analyze each and every standard. Also, what are the minute differences? So what exactly is going to happen in part 2? Yes, in part 2, first we will read our L1 notes that is there, which is in the part 1. That is where you have to revise all the 7 standards again. Okay. This is something that you should not be skipping up, right? That is already summarized in my part 1. Only then we will be analyzing this supplementary notes. In this case, I will explain you what are the minute differences that you will come across. Okay. So this is not a replacement. I'll repeat, this is not a replacement. This is a supplement to your part 1 notes. Okay. This is a supplement, right? Again, yes, ethics is similar to part 1. Yes, similar. But where is the focus? The focus you will see again and again repeated by me is that what are the uniquely tested items in level 2, because the structure has changed, right? The structure is now vignette form. So it is more time consuming or not? What exactly is the approach by institute? Where do they want me to give a specific answer? Here, I have to be a decision maker apart from being an investigator. The CFA Institute's case study format in level 2, as per me, it is more of you have to give a concrete decision. So that is going to be a crucial part. And one more important thing, here, you are not an amateur as per the format that I've seen. You are expected to be as, the idea is that you are a senior manager and you are already in the industry, you have experience enough. And then what happens? So, this level two, perhaps, I analyzed myself that they are expecting you to be a senior professional, not a fresher all the time. Okay. So, that tilt, you will notice that. Are you getting my point? Okay. Level one is where what a fresher should do when you enter into the company or you exit the company. Level two is slightly, the theme is more on the side of a senior manager. So you'll see a lot of vignettes from the point of view of senior managers. Got my point, everyone? Correct? Yes. Overall, what you notice here is that I have divided the part two into 10 sections. Okay. Under these 10 sections, apart from the basic structure discussion, what is the highlight point, the most important will be this section where I will cover each and every standard in detail of the differences. What is the difference in each and every standard? But repetitively, I've discussed the highlighted points which are not there in level one, like about investment banking firewall. What about the GIPS? Is there a change or not? What exactly is the change? What to look in the vignette? How to quickly solve the vignette, right? And what are the traps and priorities? This is going to be an amazing section, and I will discuss some Q&A with everyone. Finally, the theme again in the cheat sheet I've discussed that what exactly should be your revision method, what you should do for revision quickly. That is the final section that we'll be discussing. All right. So let's start with the first thing itself. This is where we are going to discuss the differences. And as I repetitively say, many things are similar. Yes, the standards and professional contexts are word by word similar. So, is there a new standard added by the CFA Institute? And I'm talking specifically in 2026 compared to the previous year. Is there any new standard added? Everyone? No, there is no new standard added. Absolutely not, right? No new standards are added. So if whatever we do in part one, that L1 notes, that is sufficient for you to cover all the standards, right? But how these things are tested, that is perhaps the reason why you're attending this session, to understand where is the difference. What exactly is tested from that standards, which was not tested in level one. So there are the five important differences, everyone. Number one is the format. Everyone knows the format of L2, that here you will be asked the case studies. Now, based on the institute's weightage, you probably will get around 2 to 3 vignettes as per the latest percentage. So these 2 to 3 vignettes, I expect it on the higher side because institute's priority is 3 vignettes. This is my opinion, not fact, to be correct on the ethical side. But each vignette will have, as of now, 4 questions, right? Again, why am I saying as of now? I'm not trying to be just politically correct, but the institute has been changing the format every year these days, and some changes are just cosmetic changes. I don't know why. But yes, as of now, this is the format that you'll have one case study and 4 questions. So you can expect 3 of them to be on a higher side. Okay. In level two, the depth, yes. Application and judgment. As I said, you have to be the judge here. You have to take a decision. You cannot be diplomatic here. But are we expected to memorize all the standards? Now, officially, the answer is no. But I want all our students to understand that it's better if you know all the standards one by one. Okay. You know the names and the numbers also. That helps you. All right. You must identify the violations in realistic scenarios, and these are, stories. So from the story, you have to catch up that. So your reading ability is very important, right? How faster and quickly you read. Is it complex? Is it complex? Right? Now, the complexity is not the issue here. I personally believe it is the confusion because so many names, and so many scenarios where you will be confused between what you know. You'll be confused between not only identifying violations, but there will be a lot of non-violations. A very important element of level 2 is that they mix up the violations and non-violations together. So you will have to separate what is a violation and what is a non-violation, right? For example, if someone is doing some activity, right, that activity might have two parts. One is violation, another is non-violation. So you'll not only have to just give a one word answer, violation or not, but you'll have to identify what exactly is a violation. All right. Next, everyone, yes, in real investment context. Now, as I said here, the approach of L2 is where they're expecting you are not a fresher, you are a senior analyst. So they will be utilizing a lot of analyst report, a lot of client meetings details, advisory reports, or IPS related details. Everyone understands IPS, investment policy statement. Those information will be shared and that will be discussed. So basically, in level 1, since it was a multiple choice question, they didn't have this opportunity to share that and take nuances from that, right? In level 2, they'll be putting up those mandates, investment mandates or IPS, from which you'll have to pick up things. Got it, everyone? And one thing which becomes very crucial in level 2 is who has done what and when. Yes, here the timing, I'm not talking about your timing in exam. Of course, you'll manage it. I'm talking about in the vignettes, you have to be very careful. For example, about disclosure, you will see a lot of things related to disclosure where the question will be that when was it disclosed? Was it disclosed on time, before time? What was the intention here? This is going to be very, very crucial, right? Each and every word will become important. Like one word can probably put you from ethical zone to non-ethical zone. Everyone clear, right? So the biggest difference in L1, the focus was what? Which standard is related to this, right? In L2, there are a couple of characters. So who is that person who has violated the standard and which standard specifically? And very important, the shift from recall to judgment. Yes, as I said, the decision making is a crucial part. In level 1, you are just understanding the standards. In level 2, I tell students you are a investigator as well as judge. I'll repeat, you are an investigator as well as a judge. You have to take a conclusive call in L2 compared to L1. In L1, you were just given an information and you gave the choices. You were given the choices. In L2, you have to probably, that is the mindset change. You will not see visibly mentioned, but it's a mindset change in the variants. Okay. So yes, level 2, what the standard say, that's it. In level 1, in level 2, has the standard been violated or not? So the confusion between violation and not, both will be mixed up. Okay. Who exactly has done, because there are several characters, and when was it done? Was the disclosure done before, after time, as I mentioned, right? And what should be the alternative? Yes, you see a lot of detail goes into level 2 compared to level 1. Now you might have a lot of doubts, what exactly is this and all. Don't worry, step by step we'll cover all of them. Okay, everyone. One more time, I'll repeat. It's 10 to 15 percentage as of now for CFA level 2 with regards to ethics. So as I said, you can expect around 12 questions on the higher side if there are three vignettes, right? Each item set has test multiple standards. So yes, you will notice we've done a couple of vignettes all where you will see in one vignette in four questions, there are 6 to 7 standards, all of them tested, right? So you will see a lot of standards being violated, put together, including non-violations, correct? So this is my observation. To score high standard, the rules are changed, no, but the method has changed. That's why many students, they just repeat what they've done in level 1 and then they directly go to level 2. Even that helps to many of them and they pass also, right? Many of the students don't do anything differently. They just read their level 1 notes. Why do they pass? Because again, the content hasn't changed. The approach of the case study has changed. And those who have sound experience or those who've read those vignettes, they can probably answer it directly. Okay, it's not a headache for many of the students who are already in the investment industry. Are you getting my time? Correct? As you always know, in level 2, please be vigilant about the time. Okay. Read the vignette carefully. Directly, what we do we read the story or do we read the questions directly? Everyone, we will first read the question again in level 2 also for ethics. We will first see the questions, then see. I've already discussed in the vignette this part that first you see the question most of the time. In ethics also, most of the time it is in the orderly manner, that the question number one is somewhere in the first couple of paragraphs, right? But if not, be ready for it. Again, I don't think so institute will unnecessarily waste your time, but it is going to be in the, hopefully in the same order. Clear, everyone? Got it? This is where in section number 1 I'm discussing how there are broader differences, right? But where is the biggest difference? As I said, the vignette format. So, section 2, what changes in the vignette format? How to become a master of it, right? Now, again, the even before I read, the most important thing is that no strategy will help you if you're not going to practice. And I generally tell students that with regards to ethics, it is better you focus on the CFA Institute's ethics questions. Why? Because of the language, because of the language that they use. Okay. So, yes, rest of the things, as I said, multiple scenarios, that is a change. You must extract ethics from narrative. There are no textbook style standalone questions, right? We all know this. This is fine. What is important, as I said, guys, the language is important. For many of us for whom English is not the first language, if you break the sentence, it completely changes the meaning. All right. And why is this a problem in L2? Because of this vignette form, it is so lengthy, the report is so detailed, so messed up, I should say. There are multiple characters, right? And as I said, it's a mixture of violation and non-violation. So there will be a couple of violations also. And to distract you, there will be non-violations. Yes. So you'll have to pinpoint what is a violation and what is not, right? Everyone. And each question will have specific characters, not one character, multiple characters, specific issues discussed. So technically, you might see only 4 questions, 12 minutes on an average, right? Total, right? But the problem, that so much of information. Now, this is where I tell students that it is not always possible to just see the question and directly hit the information. You might have to read what character is under what, role. For example, who is under research role, who is within the research also, whether he's a buy side or a sell side analyst. We'll discuss about that. But you have to be very clear whose character is what is their role. Someone who is a supervisor role, right? Someone who's a compliance officer, what is their role responsibility? Employer, employee, client, right? Potential client. This has to be clear. Everyone clear, right? So this characters and their roles, you might have to study before hitting the question sometimes, or maybe after reading the questions, you cannot directly go to that information like any other practical topic where you probably don't need to read who's research analyst and all. For example, in equity valuation, you don't have to all the time read, right? Who's doing the valuation and where is he working? But will that be important in ethics? Yes. In ethics, it might be important. Understood. So you can skip those things probably in the practical topics, but in ethics, you might have to read the backstory. All right. You cannot completely skip and directly hit the vignettes. That might be confusing in many cases. Again, this naturally will come only when you solve a couple of case studies. Okay. So I've highlighted the 4-step process for tackling the vignettes, right? Number one, as I said, first, we read the questions. This should save a lot of your time and you will get a clarity what you're looking for. Once you are clear what you're looking for, your mind will start working towards that. If they ask us where is the violation by this character under this situation, so you will be hunting that only. You'll not get diverted. That will save a lot of your time. Understood? Second, as I said, read the vignette actively, properly, whose name is what. I just discussed that, right? Note any timeline before, after, wherever you see that, highlight that, underline that. Okay, everyone? And if you come across any situation which is skeptical, which is doubtful, highlight that. Who's done that issue? When was the issue? What exactly is the issue? What do you think is the violation of standard? Write that in case if you want, right? While you're reading, and all of this, I'll repeat, you cannot afford to do differently. You have to do it while reading only. So you read it, you mark it. You read it, you mark it simultaneously. Are you getting my point? To save the time. And clearly answer from the vignette. Okay. Use the facts given. Do not assume anything. No assumption under ethics. Okay. Best answer has to be selected, which has with the facts. Now, why do I write here best answer has to be selected? You'll be like, Kunal, that is natural, right? You know what happens in ethics? If A, B, C, three choices are given, A might be right, B might also be right, C might also be right in that situation. But the one which is more right, or one which is more comprehensive, one which is more inclusive, that might be chosen. Are you getting it? So, unlike other topics, and this I highlighted in level one also, that when you're choosing A, B, and C, it doesn't mean that, let's say you are choosing A, it doesn't mean that B and C are wrong. It just means that A is more correct in that situation. I hope you guys are getting this because all of you have studied level one. So you understand this mindset difference, everyone. That unlike other topics like fixed income, derivatives, you get an answer, you do it. In level two, your mind should switch for ethics, and generally for level one also. Your ethics mindset should change, that you're not choosing A because B and C are wrong. You're choosing A because compared to these three, A is more right. Clear? Again, these are my personal tips. I hope you probably will experience the same thing when you do the case studies. Okay. So in level two, you will see a lot of characters. As I said, these five characters are the movie's main heroes. Okay, what are these characters? Number one, this might be a differential part for you in level two, which you might not have seen in detail in level one. I'm not saying you never saw it, but might be slightly different. Research analyst. Everyone knows there are buy side and sell side analysts, right? Buy side. We'll discuss also what exactly is buy side and sell side's role. But here, what are the standards that are going to be affecting the research analyst? Everyone, a couple of standards. And by when I'm putting these standards, I am assuming that you are aware about all the standards. And as I've already told you while solving the vignettes also, please write down the standard somewhere so it is reflected in front of you. And you, once you write it, you can of course print and put it, but if you write it, it remains in your head. So please be clear about which standards is the violation. That is going to be crucial. But I will be now assuming that you know what goes into 1B, what goes into 1A, etc., etc., right? So I'm doing this with the assumption that you have gone through the standards, you know which standard is what, right? Again, I'll repeat, in exam they're not going to ask you which standard is this, which standard is this, but it's expected that you know this. Clear, everyone? So research analysts' biggest problem is their independence and objectivity. This is tested in 1B, and in 2A, the most important that you will come across is MNPI. MNPI is material non-public information. And then in standard 5B, communication with clients and prospective clients. These are the most important with respect to research analyst. Everyone clear? Portfolio managers. Portfolio managers, everyone is aware about portfolio managers and what is their role. But with respect to portfolio managers, what are the important standards that you will come across? Suitability with respect to IPS. Am I correct? Fair dealing, whether they are dealing fairly with clients. And my favorite in level two is the soft dollar abuse. Soft dollar related issue is a part of standard 3A, duties to clients loyalty. And similar to that, the portfolio manager will come across an issue called disclosure, disclosure conflict. Let me tell you, the disclosure conflict's name has been changed. We will discuss when we go into the standard. Okay. The disclosure conflict standard 6A has now been renamed to avoid or disclose. We'll discuss about that when we go to standard by standard differences, right? These are the characters that you will come across. Supervisor and compliance officer, yes. Supervisor's role is to handle the issues like a compliance officer, right? Same thing. If you come across supervisor or compliance officer, they have a responsibility. So the failure of the responsibilities, whether they have enough procedures at place or not, whether they are taking appropriate action if there is something wrong, that is going to be crucial here. Okay. So they have an added responsibility there. You will check their responsibilities are well managed or not. Okay. Investment bankers are dealing with mergers and acquisition. They're dealing with very important information, right? And to protect the business, what do? They pressure the research analyst to release positive reports. Are you getting my point? Especially the sell side analyst will come across this situation. So we will look at the pressure on the research. Are they putting pressure on the research team to go with positive, favorable reports? That is independence and objectivity, material non-public. Again, material non-public 2A, everyone. But firewall, everyone. What is firewall violations? Firewall violation we will discuss when we go to specific about investment banking section, which I have put up in my section 5. In section 5, I will discuss all the issue related to research and investment banker violation, where we will discuss about this Chinese wall or the firewall violations. Is this clear? So this I will separately discuss in section 5, because I think this is not too much detailed in level 1 part of ethics, right? So in part 1, this is not too much disclosed. So this I will discuss separately. All right. And finally comes the clients, right? For clients, what are we supposed to look at? We are supposed to look at suitability gaps. Yes, whether the trades are suitable to this or suitable or not. And very important thing is that when the client requests you trades which are unsolicited, unsolicited means they are not in sync with the IPS. Correct, everyone? So what should be the process? Step by step process I have highlighted. Okay. And then one very common issue is with regards to gifts. Okay. Gifts is institute's favorite, I believe. They are going to ask you a lot of things related to gift, acceptable or not. And this will become, the center point when I will discuss standard 1. Okay. Where independence and objectivity is tested. So some of the red flags, everyone, that you can see here, which I have already mentioned: gift, trips, entertainment, or bonus, that will become a highlighting point for me. So when I read the vignettes, I will highlight these things. Any private meeting, phone calls, or tips, again, that will become an issue, right? This will become a part of 1B. 1B is what, everyone? The first one I've written is 1B. 1B is what? Independence and objectivity, everyone in the part. Clear, right? Private meeting, phone call, tips, these are related to material, non-public information, which is again a violation of everyone 2A. Clear? Trade recommendations and its timing related to when the information was received. And very important, performance data. Performance presentation is related to duties to clients, 3D. Yes. Under this, we will be focusing on back-tested versus actual. Back-tested, yes, this is going to be only tested in level 2, right? Because back-tested you did not discuss in level 1. So back-tested, I expect, because are the back-tested results actual results? No, they are hypothetical. So when you present the performance, what should be done with respect to forecasted or hypothetical performance with actual performance? What should be your ethical behavior? Very important. Gross versus net. Is the benchmark appropriate or not? Does the benchmark meet all the qualities or not? Very important. Compensation or referral fees, right? Whether it is disclosed to the client or not. Correct? Client request, as I said, those are not in sync with the IPS. What should be done with respect to that? And roles and responsibilities of supervisor. Were they aware of any violations? Did they skip the violation? Did they deliberately do that or not? All of these will be the highlighting points, right? Now, this under this, I'm just briefly discussing what are the important elements that you should be highlighting on the vignettes, right? But a center point of the vignette is to confuse you, yes, and that is what the objective is, because they have only 4 questions per vignette, right? But each vignette will at least, this is my belief, they will at least contain one action that is suspicious but is not a violation. Now you will be wondering, Kunal, why would they do so? Yes, because in real life, the problem is not that law is not clear. Law is very clear. Ethics is very subjective also. Okay. So how to differentiate between what is a violation and not violation to make it more precise, CFA Institute has mixed up in level 2. What I saw is a lot of non-violation also, so that you become very sharp in identifying the violation. The intention is not to just confuse you and make your exam more complicated, but the intention is you become very sharp, and this is what I noticed. So as I said, with violations they will mix up a lot of non-violation also, and this becomes a crucial thing in L2. A lot of students say, sir, why is this even needed? They should just focus on what is a violation. No, in level 2 they will mix up that. So again, the objective is you become more sharper. And as I said, the assumption is you are a senior manager. Clear? Understood this? What is that I will be highlighting on the vignettes? Okay, everyone. Again, I'll repeat, standard by standard, what are the nuances? I'll discuss that, right? As of now, we are just discussing what differential is going to be in the vignettes, what I will focus on before I start, right? And then comes my section 3. Under this, what is the structural issue? So I've been repeating until now that in level 2, the mindset has changed, that you have to give reason. You have to find or identify the reason, right? So just not identifying the standard, but what exactly was the issue, which rule was broken. That pinpointing of that is very crucial. And that's why I tell you that before listening to what I'm doing right now in part 2, before this, you should do some vignettes, and after this, also you should do some vignettes. Okay. CFA Institute, as per me, expects you to reason through the scenarios. As I have already told you, that you are a senior investment professional. This is what they expect from you. Okay. In level 2. Fair enough? Correct? Right? So you are more responsible, and they probably expect you know basics about finances, right? You are already in the role. It's not that you are a fresher. So your mindset is not as a fresher. Clear, everyone? Sometimes students say, sir, what if I have not done any job? So you've not done any job, but behave as in you are a senior here. Okay. That is the approach while you're doing this. What if you were at that position? What would you do? Clear? So here is a 6-step format that or framework that I've done, which probably is highlighting the overall differences that I've been repeating, right? Number 1, identify the facts. And this is where you'll differentiate between assumption and fact. And when I say fact, means you'll have to pinpoint on who's done what. Okay, as I said, while you read it, highlight that, right? Second, identify the standards. This helps. When I used to read ethics, of course it's way back, we didn't have the choice of anything else, so we used to do the CFA Institute's bulky ethics books. We used to get these books, and I loved those books. I don't know why they now give a choice of going ebooks is fine, but the physical books were so amazing. The cover, the print, I know you guys will laugh, but I even like the smell of the book. Those who are book lovers, if you agree with me, the best thing of the book is that when you get the book, you smell. You don't read. Understand? So I had kept my CFA level 1 ethics and all the books with me for almost a decade, r- you know. And then came a day where my mother said, what do I do with this? Right? It's taking space in my small home. And then I had to eventually give it up to someone. But trust me, even after 10 years, I was in no mood to give up that books. Okay. So those were amazing books. And unfortunately, now you know your be above the ethics is your mother, right? Once your mother gives the final judgment, all ethics is bye bye. So I had to give up those books. Otherwise I would have never have given up those books. So what I'm trying to say is that uh, it's very important that you go through the institute's language also, right? And all I wanted to say is, yes, when you read, you understand the differences, right? And that standard by standard, that is what I did for my CFA, preparation, right? Here, in step two, as I said, identify relevant standards. So all of the standards, I write down which standard is violated here, and that helps me. Okay. Identify all stakeholders who is affected, clients, counterparties, who exactly is affected. All of the stakeholders you'll have to identify. And as I said, what is ethical? And you know the difference, ethics and legal, they both are not same, right? Correct. So what might be legal might not be ethical, and what is probably illegal can also be ethical, right? So what would be a reasonable judgment? What would you do? And this is where I tell everyone that in ethics you should be thinking that what would I do if I was the one who is going to be affected. I'll repeat. See, many people think that I should approach ethics as what if I was a portfolio manager? No, 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 no. You have to think what if I was the client? What if I was on the receiving end? Would you be okay with that? See, when you think, I'll give you an example, okay? Uh, a lot of times when I do some changes on my website or information, okay, when I tell my IT guy to, that please do these changes, and, I want it to be more clear with the students, I want to give them more information. So my IT guy tells me, sir, isn't this very common? Why are you going in so depth? It's not, is it not understood? I said, yeah, it is understood, but it is always better to do that. So he said, sir, who doesn't know to do this? And I said, see, you are a technical guy. I might have got some technical knowledge, right? But not every student is so tech savvy, right? So your mindset should be that when I suggest him something, my mindset is that as a student, am I okay with this or not? As a student, is this proper or not? But what if I think as an entrepreneur only or as an IT guy only? I'll be missing out on some of the things. You're also in the ethics and in your real life. You should be thinking that would I have liked this as a client? Not as a portfolio manager. As a portfolio manager, you'll be like, am I correct? Am I doing everything appropriate as per the compliance? That will be your mindset. But you should think that what if I was the client? Will that be okay for me if the portfolio manager does this? Got it, everyone? Right? Consider alternative action. What other courses of action were available? What would each outcome have been? And this is where I told you that in ethics, A, B, C, all the choices are important. You have to read all of them. Okay. Choose and reflect, select the best, and consider whether it withstands the public scrutiny. This is what I just exactly mentioned, that you have to choose whether how will people see and how will I see. Understood? See, very important. Generally what everyone tells you, you should do what you want, right? In ethics, no, you should do, or you are expected to do what is, if you are a client. Okay, so this is, again, the definition of right and wrong can change from people to people, but the best recipe to understand is that what would I have done or I would have expected to be done if I was a client. Okay, and will this stand public scrutiny? Public scrutiny means not only the legal side. Will everyone say that Kunal, you did a good job or not? Right. So ethics expects you to be a good human being rather than being a good professional alone. Good human being is going a step further, right? It is not harming any of the client. So being right is not enough. Being right and non-harmful or non-discriminatory, that is more important. Okay. So, what is most appropriate amongst all the actions, as I said, right? So, B and C might not be wrong, but A is more correct. That is the theme. And this is where I say, I have written officially, this requires applying the framework, not just spotting the violation. The correct answer is the one that best serves the client, best serves, preserves the market integrity. Nothing is violated. So sometimes, client might ask you something which is against the capital market rule. No, and complies with the standard. Everything should be complied, right? We did one of the vignettes where we discussed that the portfolio manager was charging the client management fees for managing a deposit, which is a passive fund, right? A fixed deposit. So legally, it might be right, correct? Ethically, you might have disclosed that also. But is it fair? It's not fair. So the answer in that vignette was that you have to give back the money. There was a clawback triggered in that, correct? So even if it is legal, ethical, disclosure, but a moral responsibility beyond that is that why are you charging for something that is not appropriate? Okay, so give it back because the client did not make money and you did not do the effort. So if you're not doing the effort in that, it's not appropriate. Very classic case study that we discussed. Okay, you might see, Kunal, it's normal, but you when you see that, that is the differential theme in L1, L2 compared to L1. Is this clear, everyone? Perfect. So, summarizing, there are two thought processes here, and this is what I realized. Okay, everyone will have their own opinion, right? CFA Institute's approach is principle based thinking, not just rule based. Principle based, right? So, the spirit of ethical conduct matters, not only the technical compliance, as I've been saying. Rule based means what? Rule based means your action is perfect, technically right, within the rules. Nothing wrong with that. It is acceptable. But one step ahead, even if it is technically permitted, does this really serve the best interest of the client or not? Does it serve the integrity of the market? As I already discussed with respect to the case of that clawback of fees, correct? Right? So in level two, the vignettes present scenarios where this will be very commonly tested. What? The technically or legally the character might be right. There's no violation. You will be saying that, Kunal, there is nothing wrong legally, right? But again, as I said, care is important. So it might still violate the standards, and therefore the highest standard is care for the client. Understood? So ethics is above the law also. So many cases like soft dollar, you might we will discuss soft dollar in detail, and I'm sure you must have gone through. So in soft dollar, you might have used the soft dollar for everyone's benefit, but it should be specific to that client, right? So technically being right doesn't mean you're ethically right also. Or sometimes you're doing personal trading, and to make it ethically correct, you are also giving disclosure. But boss, you are a portfolio manager. Your job is to first trade for the clients, and you are excessively trading for your own self. I know you've disclosed it, but you're distracting yourself from your core job, correct? So that might be technically right, but is it expected from you? May not be. You should rather focus on your clients more than your own personal trades. Clear? So you might be right as per the disclosure or the compliances, but that is not right with the interest of the client. Okay. Also, some people try to, rationalize it by what? Let's say the minimum gift in the company is anything which is below $100. So you know what many do? They would probably tell all their clients, sir, give me gift. If you want to give a bigger gift, give me multiple gifts of $100 or below. So they might want to make it technically right, but of course the intention is wrong. Are you getting my point? So you are taking gifts below the limits, excessive gifts below the limits, excessive trading with consent or disclosure. Technically right, but ethically right, everyone? No, ethically not right. Got it? The intention is what you need to catch. So here comes the most important thing. Okay, what is the hierarchy that you should protect? Very important. Now we already always discussed in L1 client, employer, and personal, right? Here overall market, yes, integrity of capital market. Once you do that, it covers all the other, by the way, right? It covers all the other. But after that, the priority should be client, employer, and then your personal interest. I hope everyone is clear with this. There's no doubt in this. Clear? Everyone? Correct? Check, check, check. One, two, three, okay, and four. Let us see this. Number one, when a firm's policy conflicts with the client interest, what should we prioritize, everyone? Of course, the client. Firm's policy is against the client. go back to the client, right? This will again case to case, it will differ, but broadly. When complying with an employer instruction requires market manipulation. So employer, between employer and market, what will I follow? Everyone, who is the priority? Market. Clear? Third, when personal gain conflicts with the client recommendation, again, the client is the priority. And this is where the hierarchy that I mentioned here, it resolves everything. Whenever in doubt, come across this hierarchy, right? Whenever in a dilemma that what should I do, follow this hierarchy. This hierarchy is the most important thing. Is this clear, everyone? Perfect. Got it. Absolutely, this will make things crystal clear, hopefully. All right. Yes. All right. Now we go into the section 4, where we'll be discussing standard by standard differences or nuances. Okay. So, everyone, what exactly will be the differential in standard 1? Standard 1 is professionalism, within which now we have 5 standards, substandards rather: knowledge of the law, independence and objectivity, the most important, misrepresentation, misconduct, and the newly added competence in the last 2 years. Okay. So one by one, I will highlight the differences, the key differences, and this will also be a refresher for you for what you've done in L1. So many of the things are similar. Okay. First, if you are operating in a multi-jurisdiction rule where you are dealing with client who is sitting in Singapore, your office is in Dubai, and you are taking, you have investors or funds located in US. So when you are dealing with such issue, you will always follow which? The strictest of all the laws. Everyone, correct? Very easy. If the local law is stricter than codes and standards, local law is stricter, then we will follow the local law, but we will also disclose anything which is not in compliance with the CFA standards, that has to be also disclosed. Okay, everyone, this is very common with GIPS because GIPS is not mandatory. Got it? If the codes and standard are stricter, always follow the codes, even if the local law permits any action. For example, IPO participation, oversubscribed IPO participation, even if the local law allows, but as a portfolio manager, I will participate or not participate. I will not participate and disclose it. Got it? If you are confused or if you're not sure, legal counsel is what we generally refer to. And when I say legal counsel, everyone, legal counsel says it's legal, but that there might be a violation. So it's not an escape route. Many people, as I said previously, also would try to get a legal clarification, but that is not sufficient. You need to see whether the client is hurted or not. Legal definition does not give you the power to be unethical. Is this clear, everyone? Right? Also, discover a past violation. Right? Now, this is very important. No automatic self-reporting obligation under standards, but document it, consult, and consider strongly encourage reporting. So CFA Institute, PCP. Remember, CFA Institute conducts professional conduct, participation professional conduct program, under which they might put up some inquiry or they might ask you some details. In this case, if you discover any of the past violation, right, there is no obligation on you to report it. But if you come across that, it is better you document that. Okay. Right? Because in case if asked, you should be ready to provide it. Discover an ongoing violation by a colleague. Okay. If your colleague has done any violation, number one, you should be again documenting in writing, and first you will tell your employer to take action means to address the issue. And if your employer won't act, then this is again extreme, but then consider disassociation or resignation. Why? Because the employer is not willing to take action. Correct? Now, this is again to be highlighted that if the local law requires you to be reporting to the authorities, only then you report it. Again, the standard does not push you to report. Are you getting it? It doesn't force you to report. Correct? Clear, everyone? This is with regards to knowledge of the law. Okay, knowledge of the law, as per me, is more or less similar to your level one. Okay, the more important, this is where the problem happens, is 1B, independence and objectivity. I have written it very high yield because this is where you will see a lot of differences. Okay, difference is what? Differences, I'm not talking about the standard, but the approach. Every time when I talk the differences is not about the standard, remains the same. But I personally expect this to be highly tested. Okay, because here you will see cases related to sell side analyst, everyone, and buy side analyst. What is the difference? Sell side analyst works for those institutions where they are in a pressure to sell the reports so that the buy side will buy it. Okay, so they are more like a sales guys, right? Who are going to sell the report. So they have to push the report and they are under the banking pressure for, they have targets, right? Everyone, correct? On the other end, buy side analysts do not have a target. They are probably managing the funds or the portfolios. So, everyone, they also are pressured by whom? Not by the sales target, but by portfolio managers. Portfolio managers, they are pressured by their seniors or portfolio managers. Why? Because portfolio managers will say, don't put any negative report on my stock. I'm holding a stock. So, buy side analyst might be pressured generally not to put a negative report on a stock held by their company's portfolio managers, right? Or if the company is sponsoring any benefit to the employees, so they might be telling them to restrain from any any negative report. Sell side might be pressured to put what? More positive report. Got it? Sell side analysts will be pushed to release positive reports. Buy side analysts, again, they might also be pushed for positive reports, but they might be restricted from putting anything negative for the company that the for the target company where the analyst firm is getting benefited from. Okay, or they are holding a big position. These are the issues that will be very important in independence and objectivity. Now, this is where I come across this something called the reasonable compromise test. What is reasonable compromise? Very critical. And I had to rephrase the words. I was not getting proper English words, but I wrote it as a reasonable compromise test. What exactly is this? That here the question is not whether independence was compromised or not. The question is that could you have avoided that, or could compromise. Did you compromise, and could you have avoided that? What do I exactly mean? I'll read the exact line and then I'll give a clarity on that. The question is not whether the independence was actually compromised. It is whether a reasonable person would believe the give benefit or pressure could compromise. So remember, I told you that if you have taken a token gift, right? So you didn't compromise, correct? But again and again, taking the token gift could reasonably make you impair against your independence, right? Right? So again, what was done and what could have done, that difference is very important. Got it? I always say, what is the institute testing, or what I generally also, what are you tested in real life, is not how correct you were. Was your intention correct? I give this word the most important highlight. Your intention is what matters, and not how accurate you were legally, everyone, right? That is what is more important. Okay. So I will tell you I don't know whether this will relate or not. Okay. So, and this is, I think most of the people might come across this, but they are not very open to discuss this. And this is not related to finance. I'll just share with you guys, right? So I was accompanying one of my friend to a lawyer whose job was to settle the dispute between the family. Okay. Now, the friend of mine was probably discussing with the lawyer that is it right or wrong? If I do this, is it correct or not? So the lawyer was very helpful in the sense that I first time saw someone giving a legal advice, but also telling the client that what is that is natural to do, or what is that is appropriate to do. So, without getting detailed into the case and making it cut short, my friend asked that, I am planning to do this. Will I legally win the case? So the lawyer said, see, legally you will win the case, right? But there is a chance that after that also there might be issues and you can't avoid it. And you cannot go every time to the court and you cannot every time go to and fight a legal battle. It's better you compromise and settle it down. Are you getting my point? So my friend perhaps told that, no, but legally everything is in my favor, right? So the lawyer, generally any other lawyer would have told that, yes, you can again file a case. They might be probably tempted to increase the business, right? But this particular lawyer, and I remember that because she's now a family friend also. So that lawyer mentioned that, see, why do you want to come to the court again and again, right? I know legally you might win, but that's a hassle, and the other person will not sit down, right? It's better you mutually settle it. Now, this kind of advices you rarely see. So, legally correct, but what is the best for the client? You advise that also. Got my point, everyone? So, I saw someone putting the legal perspective to be accurate as per the write up, and also putting what is better for my client. And I think this is what the approach in every case should be, whether it's a lawyer, doctor, or we chartered holders. We are also expected to say what is correct and what is best for the client. Okay. And sometimes they might both not be same. So intent matters in judging conduct generally, but the lack of bad intent. Your intent is not bad. That cannot be an excuse for violation, isn't it? So you'll be like, my intention was right, but this happened by mistake. No, that is not the case, right? If circumstances create a reasonable threat to the independence and objectivity, then even if you had a good intent, but your action was wrong. So, see, again, intent is important, but can intent be a replacement for a bad action? No. You cannot say, see, my intention was right, but by mistake this happened. No, no, no. That is not compromise, right? Beyond that, yes, the intent matters. So, cutting down on all of this, right? This standard very important, and I've highlighted some of them which is clearly a violation, and some of them which is not a violation. Okay. For example, everyone, analyst changes a rating under the pressure from anyone like investment banking, right? Violation or what? Clearly a violation whether his intention was not doing or doing, right? Correct. But on the other hand, analyst changes a rating after independently reanalyzing from not, secret information, confidential, but public information, public data. So in that case, I'm not in violation. However, everyone, in this case, there might be a situation that the investment bankers wanted this to happen. So they wanted me to issue a favorable report. I did independent verification, independent analysis, followed all the process, and I also came to the same conclusion. Is it a violation? No. It's just a coincidence that it matches with their intention. That is not a violation. Clear? Similarly, company pays for analyst lavish trip. Okay, that is definitely a violation, right? Even if the analyst produced it completely unbiased. So, guys, you might have given a negative report about the company and still have taken the lavish report. It's still a violation. Okay. Company provides a modest educational on-site facility tour. Come and visit our factory. Correct? Again, here it's same treatment, no special treatment. Correct? It is acceptable and use your judgment and materiality. No problem with that. Correct? Everyone? Clear? Right? Next, analyst received stock option in the company they cover. Clearly a violation, yes or no? Correct? Because it's already given to you to compromise, right? That definitely whatever your report outcome is, it's clearly a violation. Okay, everyone. Portfolio manager pressures research analyst to change the recommendation, right? Because they are trying to protect. See now here how some people misuse. They say, you know what? I learned CFA Institute's code. Client protection is important. So let's, for protection of our client A, let's compromise client B related research report. No, that is a violation. So you are supporting a position with the intention that, oh, I'm telling you that, I want to protect my client's position, but you cannot misuse or you cannot violate a standard to be correct on other standard. Understood? This is very common, and they use, the same weapon to defend and attack. So this is what I'm trying to. I hope you are getting what I'm trying to say. That you are using one standard against another. That cannot be a violation. That cannot be an escape. That is clearly a violation. Okay. Here, one thing is very important. Some referrals are not monetary in nature. Not monetary in nature. Everyone, not monetary in nature, but they might also compromise your independence and objectivity. For example, I've used this statement: I refer clients to you and you refer clients to me. So something is exchanged, or at least a proposal is there to exchange, right? So this number one must be disclosed, because it will be considered as a benefit, right? Under which section? Section 6C. What is 6C? Referral. Correct? Everyone? 6C is part of your conflicts of interest, where it is referral fees. Now you will say, how does this quantify? Even if it does not quantify, it should be disclosed. And simultaneously, it should not compromise your 1B, independence and objectivity. Okay? Both should be done. Now here, if you are doing only one, is also a violation. You should do both. Got it? IPO allocation to personal account is grossly, especially in an oversubscribed IPO, it's grossly a violation, even if it is allowed. Even if you would say that I followed all the steps and procedure, right? It naturally creates a conflict. Okay. So this violates standard 1B. Next is 1C, misrepresentation. Misrepresentation and misconduct. I will also highlight some of the cases where there is minor confusion between the standards. I've prepared a separate section for it. Okay, so we'll discuss that. Misrepresentation, what comes to your head, everyone? Anything which is wrongly informed. Okay, again, you are deliberately trying to do that. So that is also cheating, by the way, isn't it? For example, back-tested performance. What should be done? Back-tested performance are actual? No, they are forecasted, or they are not forecasted, to be precise. They are done on the past data, but they are not actual performance. So should I club them with actual performance? No. If you do so, it's a violation. Clear, everyone? You should separate back-tested results with the actual performance. Clear? Cherry picking a benchmark, also violation, and here violation of 1C and 3D. 1C is what, everyone? 1C is misrepresentation, what we are doing, and 3D performance presentation. Got it? Omitting risk factors or material limitations from a research report, especially when you are doing quant models. See, quant or AI generated models, they are definitely not accurate, right? They have some assumptions and limitations, so that should be clarified. I've got a question. What if we disclose backtest performance? See, backtesting performance has to be disclosed. Backtesting is the core of your performance, right? Sometimes you are presenting backtesting performance, and you will be doing that. Backtesting is not a problem. Mixing the backtesting with actual performance and not clearly separating that and utilizing that as this is our result, that is a problem. Okay, backtesting is not a problem. Clubbing that with correct actual performance is a issue. Got it, everyone? Clear? If backtesting was a problem, why would they teach us in level 2, right? Backtesting is very important, but that should not be promoted as, see, this is what the outcome is. Okay. Plagiarism, everyone knows, is a violation, grossly violation. Must attribute the source. Even if it is a quant model or any tool that you're using, you should address the source as much as possible. Presenting model portfolios as actually managed accounts. Model portfolios, again, similar to backtested models. Anything which is hypothetical, you disclose and you clarify, and don't mix up with actual performance. Got it, everyone? That is 1C violation. 1D is clearly about cheating, forgery, right? Correct? It is more or less same. I don't expect any new stuff here. Any form of cheating, dishonesty, not only in your professional, but in your personal behavior also should be considered a violation, right? Should I share something that I actually emailed the CFA Institute? Should I disclose something about this? Okay, okay. Take it, positively. I asked the CFA Institute that as per you, violation, dishonesty in any form is a violation, right? What about in today's era, we have relationships. What if someone has cheated in the relationship? Will that be considered a violation or not? I have emailed the institute multiple times. They send me from this department to that. And eventually they told me, you can, if you come across any such violation, put it and we will give you an answer. They never give me a clarification. But my simple question, right? How am I unfair here, right? If you get an answer, please share it with me. My question to the CFA Institute is that any form of dishonesty or cheating is a violation. What about relationship cheating? Is that a violation or not? If you get across that, please share it with me. Okay. I have not got an answer. Clear? Shouldn't that be important, right? Correct? So we should probably have a public data of all those who have done cheating in relationship, and that can also be verified before you deal business with them, isn't it? Correct? Personal, yes. Personally, you rob from someone else. Personal, cheating is cheating, right? As per CFA Institute, dishonesty in any form is a violation. Of course, they probably should clarify. I am genuinely saying, I'm not kidding. I'm genuinely asking the institute. I've actually prepared a list of some of such questions that I asked to the institute. I have not got the answer. Maybe a student should ask, because I think they know I'm a member and I am an educator, so they probably will not entertain me. But if you guys can ask this, ask it to the institute. That is it a violation or? I think they will make vignette for your question. I hope they do. I would be very and guys, what if someone told me that Kunal, where is it documented? I said, come on, there are a lot of exchanges where it can be documented, right? You have promised someone that all of this thing, right? That can be a violation, isn't it? Correct? And tell me honestly, how will you believe someone who's violated people in their emotional relationship, and how will you believe with them with some business, right? That can also be a question mark, isn't it? Clear? My question, if it is not genuine, you can accuse me, but I probably realize that this is important thing. You have to connect all of these things, isn't it? So tell me one thing, I have a question to everyone. Suppose if you come across a business deal, or if you are going to give some important work to someone and that person has violated your trust in the past, emotional trust, okay, will you trust them for some ethical role? You will not, right? So isn't this a very important element? Correct? No, the person is good, but he violated, he did cheat me in the relationship. The person is good, professionally perfect. No, then it's about the intent, right? The intent is wrong. Anyways, a big discussion can go into that. But let me tell you, at least 5 to 6 emails I've sent and I've not got the answer. Okay. Next, competence, diligence, and respect. This is, as I said, standard 1E is a new standard added in the last couple of years. So those who've anyways given the exam in 2026 or before, let's say after 2023 level 1 exam, if you've given, this standard is already covered. One important element in this standard is dignity and respect. Along with competence, you being competent does not give you the power to disrespect anyone. Okay. So it's a brand new standard added, and it's not a repetition to the previous standard. There is something new element here. And that is what I've highlighted here, that an analyst who takes on responsibilities outside their expertise without disclosure or without upskilling. Yes, so you have taken a new role and you have not upskilled yourself. That is now considered a violation, right? So maybe I was a manager in operations, now I move to the sales, and I'm not aware about the financial products in depth. That is considered a violation, right? So again, it will depend on roles to roles, but by education, you can improve the competence. But is that sufficient? No. The standard does not say you becoming CFA automatically makes you eligible for the skills. No, it says even as a CFA, if you're moving from one role to another role, let's say they've clarified here from you moving from becoming an equity analyst, now you are a crypto or any other analyst, right? Those are different lines of business. There might be nuances with respect to those business. So you must acquire competencies relevant to the new role before taking the role. Before, okay, not on the job training, before, because you are responsible enough, right? Many people do on the job. No, that is not accurate. Clear? Also, when you change the roles, you are now getting into a new role, so you must actively seek to develop the required skills, because these are new skills for you, right? Many people are transitioning, right? So either through training, supervision, or declining assignments beyond current competence. Yes. So you should focus on training, supervision, or any assignment which might lose your focus. That you should not do. You should focus on the core job and you should continuously keep doing it. Now, many students ask me that, how is this possible that you were doing something else and now they are offering you something else? This is uncommon in the Asian part from where we come, from India, Pakistan, Sri Lanka. In this case, people always doubt you that, oh, you were doing something else. How we expect you will do this, right? But if you see in the West, it is very common that someone from a military background or someone from other part of the world, they are doing some other job, they are just a traveler, but now they are getting into research and analysis. That is, they don't stop you from doing that. I worked in JP Morgan, and my senior, who was a vice president at that time, I asked her that how many qualifications have you done before landing into this job, and she told me that I was not from this field at all. She was probably managing some payrolls and some, one very interesting story that she told me, that when she was only 17, I think, for 10 years she was away from her home, and she was traveling the world, and she was half a time without money and all, and then she came back to US, and then she worked into some different roles before I think at the age of 30 or 35 she then came into the banking sector. So, can you believe with such a skill, people in India, if you go and say that this is my resume, I had 10 years, I traveled, and now I decide to go into the banking sector, they will throw you out, right? Because they consider this as stupidity, isn't it? So, this cultural shift is also an important thing. However, right? However, because you're getting into the new role, you are expected to get the competence. This is what the institute is now focusing on. Clear, everyone? Right? Veteran program and return to work program. So good, right? Positive things in the West. In the West, they don't judge you from what you've done in the past. In our side, they always judge you from your past, present, future. They keep judging you, right? They are naturally judged. Supervisory responsibility. A supervisor who assigns work to a subordinate beyond that person's competence without adequate guidance or oversight may violate. So, if you're allocating the work without the person having relevant skills, if you're doing that, even that's a violation. Okay. BNY MD is from Army too. Yes, see, in the West, it is very common for veterans to get into this. In fact, in India, I've seen, and in many countries, I've seen, see, one thing with the Army people is that they already work in a very disciplined and systematic organization. And the second good quality of them is that they are used to following the orders, not cross questioning. Understood? So they work with system, teams, coordination, following the system. That skill is naturally inbuilt into them. Okay, so you don't have to inculcate the professional behavior in them. They are already professional. So it takes away the maximum behavioral related issues. And of course, the longevity, the fitness, the work culture, they know the process. Okay, bureaucrats. So many of these large companies, they hire ex-bureaucrats, ex-army, navy veterans, and etc. They hire people from different backgrounds because they already have those professional behaviors. All right. Continuous maintenance. Competence is an ongoing obligation. You are required to constantly be just taking one's qualification and disappearing. That is not appropriate, right? No specific program. Yeah, CFA Institute is trying to be very clear here that see, we are telling you you can do any other course. We don't want you to only do CFA, right? So no specific course is the solution here or any single designation. The obligation is to develop and maintain whatever knowledge is essential. Okay. And since I said dignity and respect, yes, this is these days very common. Okay. Members must treat colleague, clients, and members of the public with respect. Okay. Very important. Discriminatory, harassing, or abusive conduct violates E 1E, regardless whether it is directly related to investment activities. Okay. Of course, many companies now have a system in place for this, but this is not a choice. This is, must. All of these are must things. So in 1E, because it's a new standard, some of the traps are very interesting. And I saw in one of the vignettes a CLO tranche. A CLO tranche. What is a CLO? Like CDO, right? CLO, collateralized loan obligation. A vignette where the analyst is asked to value a CLO tranche with no structured product background. It's a complex derivative, right? Correct? So you are valuing that, and you might say that, I have a valuation knowledge, but it's not related to specifically CLO. So if you don't seek help or disclose the limitation, that will be considered a violation. Got it? Everyone? You should not do that task without having the relevant knowledge. A member hired as a portfolio manager has never managed multi-asset funds, right? And if he's doing that without disclosing, right, that's a violation of competence. Clear? Senior analyst belittles a junior team member. So common, right? Correct? In front of the clients, that is a violation. Please enforce these violations, right? Please do this, correct? Attending a firm mandated CPD program to lean a new model. Okay. What is CPD, guys? Right? These are continuous professional development programs. Many companies conduct this, right? Continuing professional development program, CPD, right? Those who are in the multinational banks, they know that the HR keeps sending you, the compliance team keeps sending you this CPD programs, which you have to participate, right? Now, participating that, definitely not a violation, right? This is what the standard requires. So whatever your company suggests you, you should definitely participate and just not skip. I know you will skip, but still, you should not just skip those PPTs or presentations. Are you getting it? These are the company's mandatory trainings many times, isn't it? Correct. So same like what you do for your after your L1 before the results, you skip that. What do we call that? That test that you have, right? After your exam, which test that you have? I forgot the name. What is that they call? PSM, right? So many of the people probably just skip, right? Of course, you should, right? That is what they are saying. The practical skill model. Got it? Right? This is the differences or highlighting points about standard one. Okay. Standard two is short, brief, very easy. That is integrity of capital market. But the most important thing here, which is highly tested in exam, is material non-public information. Material is anything which is going to affect the stock price, which has reasonable power enough to impact your investment decisions, right? That is material. And non-public means what, guys? Non-public is anything which is not disseminated broadly. Okay, means just disclosing it to few is not public. Non-public is anything which is not circulated out in the open, not through press release or regulatory filings. That is non-public. Okay. So two tests you might have to do sometimes separately. Materiality test and non-public test. Both have to be conducted. Okay. You have to check because guys, material and non-public together is a violation. Material public, not a violation. Non-material, non-public, not a violation. So check out this. Earnings miss or beat by some significant margin, and you overheard that. Okay. Material, yes. Merger and acquisition announcement or pending acquisition is a material information. Any new drug approval for a pharmaceutical company or a rejection is a violation. Management changes, definitely those are material events. We are just discussing these are material events, right? But everyone in the class, capacity utilization, factory output observation by analyst, all of this will be non-material because these are general observations from the mosaic theory. Everyone knows the mosaic theory, right? This is capacity utilization, or what is the factory output, which is based on my analysis, right? This is a part of our research. So this is a mosaic. So this is generally a non-material. Everyone clear? General industry trend and data which you get from the official sources or from statistical sources, that is non-material. So you need to differentiate between what is material and non-material. Similarly, what is public and non-public? So any selective disclosure by the company to few analysts, not in the public, it is non-public, right? Even if it is done on a con call with few, it is non-public, right? You can't use this. Pre-announcement, a company files a press release, but the analyst views it 5 times before the public posting. That is also non-public. Clear? Or you are in the elevator and you heard some conversation, all that conversation that you heard, if it is material and non-public, you acting it or anyone acting it because of you, that's a violation. You cannot trade on it. Clear, everyone? You are subject to the same standard as they are. So you overheard it, you didn't wanted to hear it, and you overheard it. Again, that's a violation, right? Someone who would say that I didn't wanted to, but I am forced to. No, no, no. Clear? So very important. And this is where level two gets a bit interesting, that, here they will confuse you by putting a lot of situation which are non-violation, like mosaic theory, right? So as I said, material and non-public is violation, but non-material, non-public, or anything which is from public information is not a violation. Okay. The analyst trade on this conclusion. The key test is any single piece of, even see, yes, why am I discussing this? Basically because they will mix up multiple scenarios of that. Any, even let's say they are looking at 10 different data, even if one of the data is from non-public, then you can't use it. Okay, so you have to check individually also, right? The key test is any single piece of the non-public information standing alone is material or not. So first you will filter out what is non-public, and then you will check whether it is material or not, or you can do vice versa also. But out of many information, even a single piece will not be able to, you'll not be able to use that. Okay, you should not be. Valid mosaic and what is not a mosaic. Okay, minor difference, very thin difference. Okay, so again, to just clarify this, public earnings report plus analyst's own factory visit observation, what analyst has come across, or what is industry articles, this is valid mosaic, not a violation. Again, make sure not a single information is non-public and material. Okay. But what is not a mosaic is a CFO privately telling anything to the analyst, like I've written here, will miss 40% of the public data or 40% of the target, right? That is not public information. That's a private information. CEO's comments or CFO's comments are not only material here, but non-public. That is clearly a violation. Okay, you can't trade and you cannot take any position even if you combine with other material, non-material and public information. You cannot combine this and say no, it is valid now. No. Expert networks, now this is very crucial. Expert networks means what? Using ex-employees as consultant is acceptable, yes, only if the information provided is non-material or already public. What do I mean by that? I'll repeat. Using ex-employees as consultant is acceptable. Ex-employees as consultants, ex-employee from some other company, you're keeping as a consultant. Acceptable only if no information is provided or no material information is shared or no no, non-public information is shared. If the consultant provides material non-public, then trading on it violates regardless of the channel used. This is very important, those companies which hire ex-bureaucrats or ex-employees from the competitors, their role should be defined to now what they will do, not based on their past. You can use their past references, but sharing or getting access to their power is somehow, have to be carefully analyzed. Got it? Tipping. Tipping. How come tipping comes into this material non-public information? Yes, tips. Passing material non-public to another person who then trades, both the tipper and the recipient violates. This was the Rajat Gupta case, right? Where Rajat Gupta mentioned to Rajaratnam that, there is a Goldman Sachs meeting with the Warren Buffett, and I've made a video on that, but that is a violation, right? Now, of course, in the court, Rajat Gupta mentioned that I just passed on the information to a friend. The intention was this, blah, 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 whatever they said. Even Rajnatham said that I didn't make any money. I rather lost the money. But clearly, passing off an information by someone so prominent who's a board member and so material information, which is non-public, that itself ends the matter, irrespective of your intention. See, intention comes beyond the, beyond the non-violation. If you have already violated it, who cares about your intention? You are violating it, right? Chinese wall or firewall. This is very important so that the material non-public information is within the team which is working on that important information, right? This is the responsibility of the employer to make sure that the research and the investment banking team are divided. Trading restrictions are applied accurately during the deal activity. What the trading blackout rules or no trade rules, those are clearly at place. This is again the responsibility of the employers to make sure that there are systematic walls, and this can be done by giving different access to one department but not the other department. This is very common. In fact, in the companies that I worked, the asset management team and the corporate finance team were on a different floor altogether, and you didn't had access to the elevator of that also in your ID. So that is going a step further, but that was very important. Okay, clear, everyone? Check. Yes. Some of the aspects here I have mentioned, which can again be conducted as a violation. This is where I'm discussing now about market manipulation, right? Material non-public we discuss. Under market manipulation, your intention to manipulate the prices or volume, correct? Now, most of the things are similar here. There's no difference in, for example, painting the tape, coordinating trades between related accounts to create artificial volume, again a violation, right? Spoofing, very important. Spoofing means placing large orders with the intent to cancel them to influence the stock price, right? You are deliberately spoofing. And pump and dump. Many of the people now, what is pump and dump? Very common in the inefficient emerging markets. Pump and dump. What is pump and dump, everyone? Spreading false rumors to move the prices, everyone, right? Pump and dump stock, these are called, what do we call in India? What do we call it as? Z group, or we call it as, what is the other name for it that we call? Anyone has idea? Pump and dump stock, those stocks which are based on tips, no fundamental, right? Trader stocks, we call it, right? Legitimate large volume trade that incidentally moves the market. Now, this part is about the discussion of what is not a violation. So, a big investment bank or sovereign wealth fund, when they put up a huge trade that will impact the stock market, yes. So, that is not a violation, right? That will anyways happen when there's a huge quantity traded, correct? Publishing accurate, well-researched analysis that moves the stock price, definitely not a violation, right? Clear? Because that will happen, especially with large institutions like CLSA, Morgan Stanley, when they come up with a research report, or very famous analyst recently, the one who, Mark Mobius, unfortunately, he just recently passed. Many of the people who are in the market since many years, they know when he publishes some report, it has an impact, right? So such an analyst, when they come across and the market reacts, that is not a violation, right? The distinction is the intent to mislead. Yes, that is a violation. Correct? Accurate information communicated honestly is not a violation. So again, you will notice the intent is the focus here. Clear? So material non-public in level 2 should be more highlighted. Market manipulation is perhaps again focusing on the same thing, that is price and volume artificially inflated, right? That will be the violation. Correct. Now comes the most and the biggest of the section, or perhaps the something which is highly tested in your L2 also, and it was tested in L1 also. And that is going to be the core of your L2 again, that is duties to clients. And all of these comes under standard 3, where you have loyalty, prudence and care, you have fair dealing, then you have suitability, performance presentation, and preservation of confidentiality. These 5 sections. Now, here I will highlight what is the difference compared to L1, so that you don't end up doing a lot of unnecessary stuff, right? This is a classic case, where any soft dollar or client brokerage that is misused, that is a very common thing that you will see in L2, right? Client commission belongs to that specific client. It cannot be used for any other purpose. That is what soft dollar is, everyone, right? When are they acceptable and when it is not acceptable? Let us hear it one by one. So they are acceptable research reports, financial data, portfolio analytics, all of these are soft dollars, correct? So these are acceptable uses. You are going to use it for the client. But any benefit that you're going to receive, like office furniture, travel and entertainment, software unrelated to investment management, or any benefit for your general operations, not for the client, that is received by you, isn't it? That's like a favor. So that is not acceptable. Clear? Next. Most of the research companies, do they trade themselves or they give trading to some others? Everyone. Most of the research companies, if you are aware, do they trade also? No, they generally allocate the trade to other brokers or several brokers. So when they do so on behalf of the client will definitely benefit. And you need to check whether the trade was given to a specific broker because of some benefit received, or was it because of genuinely it is better for the client, right? So when a client directs their trades to a specific broker, acceptable if disclosed and if it does not harm the client's best execution. Okay. Similarly, bundled commission. Everyone is aware what is bundled commission? Bundled commission, yes, must disclose what research services are received and how client brokerage is being used. Failure to disclose is a violation. What is bundled commission? Sometimes, you charge a client a fee, which is a multiple aspect fee, right? So you need to clarify the client in detail what fee is this exactly for. Not clarifying that is also violation. Proxy voting. This is for those institutions who are managing fund for large investors. For example, let's say I'm working a fund manager in BlackRock, right? And I'm managing funds for sovereign wealth fund. So the voting right will be with BlackRock because they are the investors. They are the ones who are buying the shares. The end users must be the sovereign wealth fund. So BlackRock has to vote with the best interest of not theirs but their clients, right? So proxy voting is voting on their behalf. It should be in the client's best interest, and there should be a return policy with respect to proxy voting. Can I abstain the voting? Can I ignore the voting? Ignore means, can I not participate? Yes, you can not participate also, because Participating in voting has a cost, so you have to do the cost benefit analysis, right? Abstaining from that with the intention to benefit yourself rather than client, that is not acceptable. Can outsource but you still remain responsible, yes. So abstaining from a voting deliberately with the intention to not benefit the client, that is not acceptable, right? So you cannot just ignore them, you should have a policy. Then there is something about best execution. All of this is under loyalty. Best execution means, does not mean the cheapest price when you buy, or does not mean the highest price when you sell. It is not just about the price. It is about the right price at the right time. So timing, speed, how you are executing, all of that also matters. This is with regards to standard 3A. Again, most of the things you will see are similar to level 1. Okay. Fair dealing, also in fair dealing, block trades will be the focus, because you are expected here to be someone senior who's managing block trades. Block trades are trades where you are executing large quantity of trades, allocating shares on a pro rata across all participants, acceptable or not acceptable, correct? Right? But the allocation must be determined before the trading begins and not after, so that nothing is biased here. Okay. One thing which is a violation here is, what is a violation here? Assigning favorable fills to the clients. So you are doing cherry picking of the clients. That is a violation. Also, as I mentioned, oversubscribed IPOs, you participating in that is a gross violation, right? Members cannot either participate, neither they can put shares from one account to another account. They cannot even do that. Even that's a violation. But does fair means equal treatment? No. Companies are allowed to have differential treatments, which is called tiered services. What is tiered services means you are given some privilege or some additional services based on the fees that you pay, which is publicly disclosed, and everyone is allowed to, those who pay. This is acceptable only, as I said, if it is disclosed to all the clients. Premium service must be available to anyone who is willing to pay. It should not be given only to some specific people. It should be open for all, right? Those who are willing to pay. Giving a client advance notice compared to others, right, is also a violation, yes or no? That is also a violation. Favoring any client over other is a violation also. This is with regards to standard 3B, fair dealing. Suitability is something I personally expect highly differential in respect to the approach tested in exam. You will see a lot of case studies where the suitability is questioned. Suitability directly has a connection with IPS, right? Every investment must be evaluated from the total portfolio point of view, not only from individual risk and return, but from total portfolio. I have a question. What sort of activities are okay under premium service? See, premium service is any activity, right? Two things you should highlight in premium service. Are they harming other clients? If yes, those services are not acceptable. Second, within those who are taking that services, are they favoring them over others? That is not acceptable, right? One example I will give you. For example, let's say there is a change in recommendation. Okay. So initially we recommended it as a buy stock. Now we are doing it as a sell stock. So what should be my primary job? My primary job should be to inform all via an email or message that we've changed the recommendation, correct? Whether it's a premium service or non-premium service, that basic information I will share it to all. Yes. Now, what I will do is that I might go to those who have taken premium services and I might check out their portfolios and do a detailed discussion with them, correct? Or I will allocate a relationship manager especially to help their portfolios because they've taken that premium services. So basic information to all, and then those who've taken premium services, I might go a step further. You cannot then compromise on the basic information. Basic dissemination should be common for all. Okay. Yes. A high risk instrument may be entirely suitable if it balances on the otherwise conservative portfolio. Yes, as I said, you cannot individually discuss or conclude whether an asset is suitable to the client or not. You have to look it from the overall portfolio point of view. Your focus should be on the IPS. IPS is very important. You have to follow the IPS, but IPS is not a one-time job. You have to review it, and any circumstantial change should make your IPS updated. When I say circumstantial means circumstances can be with respect to the client. Any changes with respect to client I've mentioned here, about any changes in their relationship, they're getting married, having kids, or any health related issue, or even the market changes, even that might make the IPS review again, right? Leverage, you have to be very clear. If the client has mentioned that leverage is not suitable for him, you should not take into any position which will compromise that. Client's risk tolerance at any point should not be compromised. Okay, everyone. Now, there is a situation of unsolicited trade that the client requests. This is a unique thing in terms of suitability. Now, although I've mentioned in my L1 notes clearly, so there's nothing new here, but I will just clarify. So, let's say a client calls me and asks me to buy cryptocurrencies, which were not a part of our IPS, correct? So, number one thing I will do what? I will not blindly accept it. Number one, I will discuss the unsuitability with the client and explain him why this is not appropriate as per our mandate. Okay, this should be priority. Now, of course, here the client might force me to still take an action. So I will see step number 2 and 3. Step number 2 is that, is this a very minor impact on the portfolio or a major impact? So if it's a minor impact, I will follow whatever the company's policy is. If it's a major impact, if it's some very material to the portfolio, I will tell the client, sir, either update the IPS, okay, only then I will follow, because this is a material impact in the risk return, correct? Or do it in a separate client directed account, do it in a separate account, not under this account where the IPS is clear. But what if the client refuses that? Then I will reconsider my relationship with the client. Three things. If it is material, number one, tell the client to update the IPS. Number two, if the client is not willing to do that and the client is in the rush, tell the client to do it in a separate account, not under this account. And if the client doesn't say, if the client doesn't agree with A and B, then you reconsider your decision with the client or relationship with the client. Why? Because if something goes wrong tomorrow, the client will blame you. Got it? Everyone? So never execute without discussion first. Number one, you should discuss with the client and also get the client's consent. Okay. Between the institutional and retail clients, what about the suitability? See, individual clients, you can deal with them, their respective suitability, but institutional clients, sometimes it becomes confusing. For example, if you're managing money for pension funds, then whatever the fund manager says is important, but you should also check the suitability with the mandate of the institution, not individual beneficiaries. So you should not focus on only specific beneficiaries. You should focus on what is the fund mandate, what is a pension fund or sovereign wealth funds, who are the ultimate beneficiaries, and not specific beneficiaries. What is the overall mandate? That is very crucial. You have to analyze that. Got it? Everyone, the suitability clear? Now, the last two sections with respect to duties towards clients, performance presentation. Now, this is where it's going to become very interesting, and I do expect some things which we already discussed about the back tested results. Back tested results, everyone, you have to clearly label them, that they are what, simulated and hypothetical. They are not real, and you should not mix with the actual returns. Many companies goof up or mix up gross and net fees. They make the fees so complicated that you are never able to understand what is the actual returns. Okay. So must disclose consistently between gross and net fees. Now, what is gross and net? There are a lot of expenses, operating expense, management, custodian charges, taxes, all of that should be properly clarified. Okay. So the return should be gross, net, what is deducted, what is not. Every step by step, it should be cleared. Okay. Guys, can I tell you one data of a company, someone who's in the broking business? Okay. In India, for example, I will give you the example of India. All the brokers have in the past have at least once being fined or penalized by the regulator. Do you know this? All the brokers, for any violation, at least once in the past, they have been penalized, or they have been put up some penalties or some restrictions on them for some violation by them or their clients, except one broker, and that is Zerodha. Zerodha, as per the SEBI report, there is not a single case of any SEBI or regulator violation. Can you believe that? You are in the industry where this is very normal and so many years in the business and not a single piece of violation. Understood? Completely bootstrap company, not taken any funding. Amazing, right? Clear? Such an amazing business setup. A case study, perhaps, that how you can become a billionaire without any funding. This is amazing and ethically right. Okay, correct. Do you know they had started up an education arm to do trainings? Okay, but then that I think it was called 01. So their intention was to train and spread education with regards to financial markets. But then the regulator said that it's a blur line between you recommending stocks and you putting, you training. So to avoid that conflict, they stopped the business altogether. Can you believe it? They stopped that altogether to avoid. They could have done the changes and all right, but they don't want a single potential violation also. So they let go of their money and stop that completely just to avoid future violation. It requires a lot of guts to do so. Got it? And somehow sometimes the regulators go way beyond to put restrictions. So they didn't even want that potential, even their intention was right. They didn't want it even a potential violation. I think people say companies like Tata are highly ethical. I would say gone are those days. Look at Zerodha, the most ethical company, I personally believe. Okay. Anyways, so you can be ethical and a billionaire, both. That is also possible. That's what I'm trying to say. Right. Terminated accounts. Terminated accounts should be included. If you don't, it's a violation. It creates survivorship bias, violation of 3D performance presentation and misrepresentation also. Isn't it? So it's a violation of 1C also, misrepresentation. Selecting performance benchmark, you have to make a comparable benchmark. If you're not doing it, if you're making a general benchmark like S&P 500 for a very small cap niche portfolio, that's a violation. Model portfolios versus actually managed, as I discussed, quant based or any model portfolios, those have to be distinguished. They have to be clearly distinguished between what is actual and what is, model portfolios might be inaccurate also. They might not give you the actual results, correct? Preservation of confidentiality is perhaps the same in the level 2. There is no change. But just one small thing, confidentiality extends to formal clients also. If there is any illegal activity by the client, then you might be required to disclose. So there are three exceptions: illegal activity by the client, correct, and the disclosure by the local law wants you to disclose it, or finally if the client permits. Only under these three cases there is an exception. Otherwise, preservation of confidentiality is at most important. Clear, everyone? With respect to changes with respect to standard 3, very crucial for your exam, because majority of the standards are focused on the client. So standard 3 is very, very important. Got it, everyone? Clear? Yes. Okay, now we are moving to standard 4. Standard 4 is duties to employers. Here, one of the highly testable is what you should do when you are going to leave your company. You're going to leave your employer. What is allowed and what is not allowed, what is a violation and what is not a violation. So it is okay to do what and not okay. Basically, very, very important, highly testable. Okay. So, general knowledge, all that you acquire from your company, all the experience that you gain, right? All the skills that you learn there, right? And basic information about the client that you remember, right? Not copying the database. All of that is acceptable when you leave, right? You can take with you. But any information about the client list from the database, or any model or any spreadsheet or any document about your employer is not your property. You cannot take it with you while you're leaving, right? This is what we already discussed in L1. Client contact information copied from the firm's systems or email records, even that is a violation. Okay. So we are discussing what all are the violations, everyone. Also, before you resign, right? Before you resign, trying to solicit your clients, okay, for the new business or informing them about your new business or new employment, even that is a violation. Plus, on social media, you should not do any activity that will harm your employer. Okay, you should probably have separate accounts for your personal and professional accounts, right? Now, when I go to any other employer, am I allowed to take my clients with me there? Everyone? No. But in US, there is a broking recruiting protocol under which you are allowed formally. This is a US protocol for broking where you are allowed to take up all your clients to the new broker, right? Now, this the law allows it, but ethically it is not correct. So, what should I do? Everyone in the class, member is in agreement, yes. However, right? Since the law is allowing, there is always better if you disclose it. Okay, so you should disclose that also, right? If there is any such agreement which might, which might cause an issue, it is better to disclose it, right? But yes, in the broking industry, this is allowed in US, so that is fine if it complies with the law. Additional compensation. Now, additional compensation is similar to which standard? It's similar to independence and objectivity gift. Yes or no? Now, with regards to this, I've done a separate discussion also. I will discuss that. But any compensation that will compromise your activity with regards to independence. Now, see the difference and similarity. Any compensation that competes or conflicts with the employer's interest. Means, what if you are being offered a special incentive for better future performance by one client? So you will be probably giving more attention to that client. Now, if you do that without informing your employer, or you accept that before consulting or getting an approval, getting a written consent from your employer, right? This written consent can be in the form of email also. If you're doing that, it's a gross violation, right? Client promises a bonus, right, based on future performance. Again, that requires a consent. Disclosure is not enough. And this is where I tell the students that 1B deals with what? 1B deals with gift. Gift is for past, but gift is for past. But 4B deals with additional compensation, that is for future. Okay. Gift disclosure is okay if it is within the limit, but additional compensation requires consent from all the parties. That's a clear differentiation. Is this correct, everyone? Understood? So, what is a violation, everyone? Supervisor knew about a subordinate's violation and took no action. That is also a violation. This is now again, this is standard 4C. We'll discuss about that. But about everyone clear about what is the difference between in the 4B and 1B? 4B talks about future compensation for a future performance related compensation. Written consent is needed. Disclosure is not sufficient. But 1B is about gift. Disclosure is enough. Okay. Now, responsibilities of supervisor is highly tested. So your violation that you knew your employees or your subordinates are doing violation and you took no action, that's a violation. Supervisor should have known any red flags about the employees or any unusual behavior in the company under their supervision. But if they did not investigate, even that is a violation. And if they did not check any policies and procedure were at place and they took the supervisor responsibility, even that's a violation. You should not take a responsibility if you don't think so. Checks and balances are in place, right? However, if the supervisor had no knowledge of about any violation under their supervision, but they followed the adequate compliance procedures and they made sure that everything was in order, and still there is a possibility of violation, right? You can't control, right? After having everything at place also, you might come across a situation which can be a violation. Now here you are not in violation if you had no knowledge and you took appropriate steps. Now, when I say appropriate steps, means provided the supervisor responds promptly on discovery. So you had no knowledge and you took immediate action when you got so. Together will constitute not a violation, right? But you didn't knew it because you just were, not having appropriate checks and balances at place. That's a violation. You failing to execute your responsibility is also a violation. Okay. If compliance and procedures are inadequate, what should I do? As a supervisor, I will decline the responsibility. Yes, until they get into the place. Clear? But upon discovering a violation, number one job is to immediately take an action. And what is immediate action? Respond promptly and conduct thorough investigation on the suspected person. And until the investigation is complete, restrict the suspected employee's activities. Clear? Supervisor does not need guarantee of no violation. Of course, there is no guarantee that you need to extract. Only that reasonable procedures exist and violation are dealt promptly. So supervisor is not an assurance, but yes, did you do best to avoid that violations as a supervisor, and did you act promptly when you came across that? That is the intent, again, is tested here, if you notice. This is under 4C. 4A, B, and C deals with duties to employers. Okay, under duties to employers, for A, B, and C, loyalty, very important. This is deals with exiting, when you are exiting mostly. Additional compensation and independence and objectivity, quite close, right? And responsibility of supervisors, this is highly tested. Okay, at the end I will also discuss with you what are the high yield expectations from the CFA institute in level 2, but already notifying that responsibilities of supervisor are very important. All right, yes. Now let's quickly do 5A, 6A, and 7. 5, 6, and 7. 5 and 6 are again highly testable because here it gets more detailed into research and analysis. Okay, so this is where you will see a lot of information that you are going to be doing it in the research report. So third party research report, you will see a lot of them are tested. Even if you are using third party research report, your responsibility is that you must assess all the information and assumption used by them, and this goes with external managers or sub-advisors also. When you're recommending them, a proper due diligence of them needs to be taken by you, correct? Okay. Same way, when you're using quant or algorithm models from someone else, right? You cannot blindly take them. Means you should not have a black box theory. You should understand the models, assumptions, and you should have a reasonable basis before choosing those models. Okay, your responsibility doesn't end by just outsourcing. Plus, whenever there is a change in recommendation because of new information, right, it should be because of new information only and not because of anyone's instruction. If you're blindly doing it because of anyone's instruction, that is a violation of 5A, diligence and reasonable basis. 5B, again, is there any big difference here? No, but you will see a lot of cases related to third party research. Okay. 5B is communication with client and prospective clients. This deals with fact and opinion. Okay, fact and opinion. Now there is a minor revision here, right? It added what? Requirement to disclose all the nature of services and the cost to the client, right? Why? Because there was a very blur line between fact and opinion, and the client were not properly informed about the costs. So they were kept in, dark about what is their exact cost. So that's why the difference between the gross and net returns has to be clarified. Okay, what fees? The best practice is disclose all the fees and charges, everyone, to all the clients before they empanel with you, right? All the services that you are able to give and you will be provide, that has to be clearly disclosed, right? No specific dollar format is required. Clarity and completeness are standard, means you will make sure that the client is able to evaluate the cost. It has to be simplified. Okay. Nature of services, you can read across what are the different natures and services that you will do. Whatever you won't be doing it, you have to be clarifying that. So client has to be exactly told what services are offered. As I said, there is a minor change with respect to 2023, that they have made it obligated for the employers or the companies to disclose detailed costs. This was initially not a compulsion, but now they have done a detailed compulsion of the cost has to be disclosed. Omitting indirect cost is a violation. Indirect cost means, sometimes many of the funds, they only tell you what is, expense ratio. Expense ratio, everyone is aware. Okay, so expense ratio is a percentage of the fund, right? Correct. So fund PER layered inside a portfolio fee is a violation. So you cannot hide it. You have to, or you cannot entangle it to make it more confusing. The investor should know what I'm paying exactly and what is for what. Is it a brokerage? Is it a service fee? Is it an advisory fee? Is it a referral fee? What exactly? Everything has to be clear, right? Disclosure is not a one time. If the fee structure changes, even that has to be promptly disclosed, right? Very easy. Investment process disclosure, yes. How the investment is taking place, that also has to be taken, that also has to be disclosed. If there is a change in the philosophy, if there's a change in the strategy of the company, that has to be disclosed. Risks and limitations, everyone, right? Many complicated derivatives that you're dealing with, in that there are several risks. Alternative investments have several risks which the client might not be aware, so it is your responsibility to disclose that. Correct. Facts and opinions. Overall, what is the core requirement, everyone? As I said, forecasting, projections, back tested, those are all facts. No, those are all opinions or expectations, right? Correct. Some statement like we expect to grow, or we expect this happened, this is something that I'm expecting in the future, right? That is an opinion, correct? But it actually happened in the past, that is a fact. So that is a clear, the wordings are very, they are very clearly mentioned by the institute. You should be also be able to differentiate between both. Quant models are facts? No, they are not facts, right? They have limitations, so they are considered as, projections. Material changes to investment process must be disclosed immediately. You should not wait for the seasonal disclosure, like many would only disclose when there is a new quarterly report. No, you should disclose it immediately. That should go with the risk changes also. That should be disclosed immediately, everyone, right? This is all about standard 5. We are in standard 5, correct? Standard 5 deals with investment analysis. Research analysts are mostly affected by standard 5 and to a large extent standard 6. Okay? So diligence, reasonable basis, communication with clients, and record retention is somewhere. I'm sure everyone remembers, in record retention there was a 7-year condition. The record should be retained for at least 7 years, right? And when I say record retention, means what? All communication with clients, email, text, messages, any communication, any document shared. Member who changes the firms, can they take these documents? No, they have to recreate their models, anything that they have done. They cannot take any supporting documents with them. That's a violation, because now it's the information of it's the property of the employer. You should recreate, and that too from the publicly available information. You cannot just depend on the past information. You'll have to recreate them. Okay, everyone, this is the key thing. And 7-year criteria is very commonly tested. Okay, it was tested in L1 also. Now comes standard 6. And in standard 6, as I mentioned, in standard 6, there is one very interesting thing. What is interesting thing in standard 6? The name has changed. Initially, you know what? It was only disclosure under conflict of interest. The number one was only disclosure. Now they said no, avoid first and then disclose. Means if you're confused between avoid and disclosure, what should you do? Number one, you should avoid, right? The best practice is to avoid, correct? Actual conflicts or the appearance of conflict whenever it is reasonable to do so. First is avoid. If the avoidance is not, when the avoidance is not reasonable, make clear and complete disclosure. So only when avoidance is not possible, only in that case you will be expected to disclose. But the question is that if both were possible, what should I do? If avoidance and disclosure both were possible, correct, what is the best thing that you should do? You are required to what, do the more effective step, and that is what, that is number one, avoid. Okay, avoid is the priority. The reason that the standard has been renamed avoid and disclosure also tells you the priority, also tells you the priority, correct. Also, what if there is avoidance was clearly possible and simple, and the member chose to disclose? Member chose to disclose. Avoidance was possible, the member chose to disclose. Now, you would say that, how is this a violation? Well, now after the renaming, this is a violation. Why? Because when avoidance and disclosure both were there and you only chose disclosure, so this is not enough. This is a violation. When you could avoid that. Clear, everyone? The sequence has changed. Got it? Disclosure must be made to employer, client, and prospective, basically all the stakeholders, right? That is what the disclosure should be for. It should be simple, prominent, not entangled into words. It should not be complicated, and it should not be hidden. Hidden means what? It should not be buried somewhere in the footnotes, somewhere. And many people do what, they don't bold it and they write it in small, very small minute font. Those are deliberate ways to hide it. No, that disclosure has to be clear, right? Sometimes the disclosure are so blurred that you can't even read it. Personal ownership of securities been recommended or held by clients, guys. First of all, this is to be disclosed, right? Correct, this is to be disclosed. Means, see, you already held the securities. Now you are recommending it to client. Yes, to disclose it. But again, every time I'm saying disclose, remember, if there was a possibility to avoid, first do that. Okay. Investment banking relationship means this is very common, where the company is doing M&A advisory to them and also doing a research report. Compulsory disclosure. Board position, conflict of interest. It creates conflict of interest, right? So this is surely a disclosure. There is no choice. Performance fee arrangement or compensation tied to recommendation, definitely disclose. Referral fees, in whatever form it is paid, it has to be disclosed, although there is a separate section for referral fees. We have standard 6C specially for referral fees. Everyone, some things which are clearly a violation. Analysts own shares, they own share in a company that they are recommending, right? And publishes an upgrade without disclosing, grossly a violation, right? Ongoing M&A advisory and you are recommending the stock, again without disclosing, is a violation. See, this is something that you can't avoid, right? You are in the research also and you have another department doing M&A advisory. Can you avoid this? No, you will not be able to do business. So then disclose. If it is avoidable, avoid. If not, disclose. Okay. Now see what is not a violation. Analyst owns shares and discloses the ownership prominently at the top of the research report, not a violation. Disclosure does not require divestment. See, I'm not trying to cover it, I'm not trying to hide it, but I already hold a position. Correct? So what should I do? I will definitely disclose and make it upfront, right? Now, what if I change the situation? What if in this case I do it after, I basically I'm buying the shares already and I'm disclosing it? That is not a violation. What if I first let everyone buy and then I buy myself? Even that is not a problem, right? But still you will disclose. Are you getting my point? Everyone buys the shares, right? And then I buy. So I'm not doing front running, but still it is better to disclose. Okay. Now I haven't seen such case, but that's what I'm trying to say, that you holding a position in that, the day you do that, it is better you disclose anyone who is affected. All right. Priority of transactions, very important. And priority of transaction focuses on front running. Front running is so common. And in my life, I've seen that. I've told that in one of the lecture also in L2 about the cases that I saw about HDFC. HDFC mutual funds in India, they have been in the past known for front running, right? Front running is where you know about pending trades and you take a position based on those pending trades. Before executing for client, you execute and you benefit, right? That's clearly a violation and now illegal also in many countries. However, family member accounts should be neither favored nor disadvantaged. They should be treated as normal only. Blackout and restricted periods, now there is a problem here. When you put a blanket blackout, right, what happens with that? It gives already a signal, right? So whether it gives a signal or not, must not personally trade during such a recommendation change. If you're doing that, it's a violation. Got it? You are saying Axis Mutual Fund was caught few years back, right? See, I have got a comment about Axis Mutual Fund. Remember what I told? It is a culture. Do you know what Axis Mutual Fund was merged with? The biggest fraud in mutual funds in India was, you know which one? It was in 90s. It was called Unit Trust of India, UTI. That was the first mutual fund launched in India and the first big scam. Are you getting it? What happened? Then the government shut down the company UTI. And you know what they did? They merged it with Axis. So Axis, the bank's genes are same. Remember I told you about the case of IDFC, right? IDFC, they have a lot of people from, I don't want to name the company. It is a very prominent developer based in Mumbai, and they are known for, gang related activities, but they were a listed company. Okay, I don't want to name them. I don't want to be in any issues because they are still very powerful, dealing with underworld and all. So when the company collapsed, they took all the employees from there. So the culture is same. Remember, I discussed this thing, I think, right, about IDFC, right? When I went there to their offices and what they were doing, they were actually threatening those, the loan recovery team was threatening others, right? Same way, when you are saying Axis Mutual Fund case, culture is the same. It's the same people from Unit Trust of India. So just rebranding doesn't change things. Understood? So you need to know who you are dealing with. Okay. So I tell my students and my colleagues, and even I manage some of the clients, so I tell them that they ask me, Kunal, the State Bank of India is a very large bank, but a very poor service, right? So I tell them, yes, but understand one thing. If that bank defaults, right, the entire country defaults. So it's still safer than others. Correct? They might be lazy, but a massive collapse, the government will not let it happen. Right? So you need to see the service. Some people go to, when I was in the industry, many people told me, Kunal, why are you opening your account with this? They don't give you any service. Why don't you open your account with Yes Bank? Yes Bank. You remember Yes Bank? Amazing bank, amazing service, excellent service, right? Superb service. But what happened eventually? Corporate governance issues. So rebranding, servicing, new logo. suit boot employees talking to you in accent. That doesn't change the culture, the genes of some of the companies. This is what I believe. All right. Next, information about pending trades. As I said, trading on that is a violation, right? Referral fees, I've already disclosed that all the compensation forms has to be disclosed. Even soft referral arrangement, which is not monetary, I disclose with that example. I refer you, clients you refer to me. Even that has to be disclosed. And when I say disclosure means it has to be done to all the affected parties, employer, clients, prospective clients, and very important, it has to be disclosed before accepting the referral, not after. All right. This is about standard 6. Standard 7, very similar to what you did in L1. There is hardly any differences. I'll just recap what is standard 7. Basically, it talks about 7A and 7B. 7A is about cheating during the exam or expressing about the CFA institute. So, if you are a volunteer, you should make sure that you don't reveal any information to anyone. Second, volunteer as a CFA institute proctor or examiner, exam checker, etc. Right? Can I give any bad opinion about CFA institute? Yes, you can give, but make sure you don't reveal any confidential information while doing so. Correct? Correct references to designation. Yes, you all can write CFA level 2 candidate, or once you pass, hopefully you can write pass CFA level 2 examination, but you cannot write CFA level 2 as a qualification. And definitely you can write your name, comma, CFA or chartered financial analyst without full stop or any other thing. It should be behind the name only. This is the only acceptable thing. Anything else is not acceptable. And to get the name in your to get these 3 letters behind your name, you should not only pass the exam, but you should annually fill up the professional conduct statement and pay the annual fees. If you don't pay the fees, you're not an active member. Okay. Partial designation is anyways not allowed, as I already discussed. Clear, everyone? So paying the membership fees, without that, it's a violation, right? Nothing new in 7AB, everything same. This is where I discussed what section 4, where I'm discussing step by step or standard by standard, what are the similarities or differences. Now, out of this, as I mentioned earlier, there is section 5 where I have separately highlighted the issues with respect to sell side analyst first and buy side analyst, and highlighted few violations. Okay. Why this is crucial? Because you will notice a lot of case studies where there are multiple standards affected within the case study related to sell side and buy side analyst. This is very common. This is very common, especially in the investment banking, where they have people from multiple departments or multiple job profiles which might conflict each other. So what are the key rules for sell side analyst? And by the way, what is a sell side analyst? I already discussed. Anyone who is in the institutional sales of research report, like Morgan Stanley does, right? They sell their research report. Even CLSA does. They do what? They sell their research report. They pitch to the funds or to the buy side analyst. So their objective is to sell the research report, right? Now, because they hold very vital information, they should have strict barriers, that is Chinese wall, right, or firewall. Pre-publication review covered by the company. Yes, this is very interesting, and we saw a couple of case studies related to that, the where the analyst is sharing the research report or the earnings projection with the company itself. Okay, that's problem. Is that a problem? Is that a problem? You sharing with the target company that, see, this is the report that I'm covering about you. I'm going to publish this report about you. Is that a violation, everyone? No, that's not a violation. Now, they asking you for the report before you publish. Is that a violation? They asking you for a report before you publish. Is that a violation? Even if that, no, that is also not a violation. They want to know that what report are you going to put across. Even that is not a violation. However, they cannot request any changes in the report, right? That is a violation. Many companies do, they ask, are you covering my company? Yes. If yes, can you share me the report? I can just probably help you with some factual corrections. But if they're influencing you, that's a violation. Got it, everyone? Then there is a restricted or quiet period. What is a quiet period? This is very big issue for sell side analysts. They are tempted to participate in oversubscribed IPO, right? They are tempted because they have this power. So analysts typically cannot initiate or publish research on a company around the time of IPO or secondary offering managed by their firm, right? So they might be pressured to put a positive report. So they should probably not get into that. They should avoid that. Okay. Compensation disclosure. Now, this is where it is the responsibility of the employer also that they should make the research reports disclose if there is any compensation given specifically for publishing this research report. Means, is this paid report or not? Okay. This is something that the media also needs to be disclosing, right? Whether this is the paid or not, isn't it? Coverage decisions to initiate, maintain, or drop coverage must be made on the investment merit or not, whether the client is a banking client. But again, this one, I will explain you what is this issue. So many companies do what, for example, the company that I worked, and we one of our analysts came across with a research report on this biggest company in India, and they came up with a sell report. And the bank CEO called us and told us that, why are you doing sell report? Don't you know how much business we get from that? So he said, then do you want me to do buy report? He said, no. The person said, the better thing is drop it from your research list. Now, you might be technically right, but that's not correct, right? What about the clients who are holding the position in that stock? Are you getting my point? So just dropping it to avoid the conflict, even that is a violation, isn't it? Correct? And analyst, if their compensation is directly tied to the specific banking transaction, is a violation. Now you'll be like, Kunal, isn't the sell side analyst payment or incentive based on selling the research report? Yes. But I cannot tie it to, I cannot tie that incentive that, with this research report, if we get investment banking, other businesses, we will pay you for that. That's like influencing the research report to be positive. Now, that is a violation. Got my point, everyone? So I've elaborated this into a case. Okay, see this. Investment banker reviews analyst draft report and asks the analyst to change the rating from sell to hold. And analyst complying that. Isn't it a violation? Everyone? Definitely if he disagrees to that. Correct? But on the other hand, the same investment banker calls me and says, Kunal, I don't think so. You should do sell recommendation. You should do buy recommendation. And then I myself do thorough analysis. And I also come to the conclusion that yes, I think there are some factual issues with my report. And I have done a specific thorough analysis. And then you also come up with the same report that is coincidentally in the line with which your management wants. Correct? So see this. Analyst compensation is linked to general profitability, not incentivized based on other business, right? And the analyst maintains independent ranking. This arrangement requires disclosure, but is not automatically a violation. Means what? That I do not have any special bonus from the investment banking revenue. My incentive is based on my research report job. It is not based on other business that the report gets. If that is the case, then it's a violation, isn't it? Because it is actually tempting the analyst to be what? Dishonest. The analyst is tempted to give positive reports. Clear? So that will compromise my independence and objectivity, 1B also. So if your bonus is tied to that, it's a violation. However, if it is not tied to that, and then if I come across with a research report, which is probably same as what the M&A deal advisory team wants, right? They wanted me to come up with a positive report, and my report is also positive based on my independence and objectivity, and my incentive is not connected to that. In that case, it's not a violation. But did you notice what I should do to make it much better? What I should do? I should disclose. Yes, you should disclose that your company or firm has some other relation with the company also. Is that clear? Right? So, again, just clarity that this is not an issue is not enough. You might have to disclose also. My suggestion is that in order to be in non-violation, it is better you disclose. Sometimes intention isn't enough. The intention has to be disclosed if there is even a slightest dilemma or doubt. Got it? This is very common with the sell side analyst. Buy side analysts are subject to same independence rule. Now, who are buy side analysts? For example, someone who's working in the mutual fund or portfolio manager, right? And they are going to pick up the research report and accordingly invest. So their role is similar. They also have to follow the same things. I've got a question. You mean linking the investment banking revenue is okay as long as it is disclosed? See, I'll clarify what you're trying to say. First of all, incentives are should be based on the company's overall profitability. It should not be specific that, oh, if your research report is favorable and it helps a deal, you will get incentive. That linkage is not acceptable. Got it? That linkage of my incentive as a research analyst with the other businesses is not appropriate. Clear? It should be generally linking to the company's profitability. It should not be tied to a specific deal. For example, let's say we are going to come up with a huge deal with a company, okay, or we are going to cover an IPO of a company. So I will tell all my analysts, hey, let us all come up with a report in support of this, and those whose reports bring maximum trades will reward them. Is it a violation or not? Everyone, is it a violation? Yes, it is a violation. Why? Because I'm doing what? A specific deal is requested to be supported by a positive report, encouraging others to be positive over that company when they should be rather independent. So if the incentive is tied to that deal, it's a violation. Got it? Everyone? Buy side. In buy side, the portfolio manager is holding a huge position and he requests the buy side analyst, hey, you know what? Don't change the recommendation. Even if you disagree with our recommendation, don't, because I want people to hold it. Otherwise, the stock will fall and my performance will be degraded. So they might pressure you emotionally to do that. That is again a violation, right? Buy side analyst changing recommendation without independent analysis, similar, right? You're compromising on that just to save your company's portfolios, right? That is, or performance. That is also a violation. They must document their analysis and maintain records of recommendation changes, if any, right? They should maintain that. So buy side analysts might be pressured by their own portfolio management team to not change the recommendation because their portfolios will suffer in returns. This is something that I wanted to highlight in this section, the issues between the buy side and sell side analyst. And why I'm highlighting it separately, because it gets into the multiple violations. Got it, everyone? Clear? Right? Okay. Now, here is an interesting question. This is what section 6 is all about. GIPS. Now, if everyone remembers, GIPS was a small section discussed separately in L1, right? Now, what is noticed here is that in L1, GIPS was introduced. What is GIPS? Whether it is compulsory or voluntary, it is voluntary. What is a composite? All of those were introduced, right? The definition, what about the verification should be done by independent third party, all of that. In level 2, the good news is that GIPS is not separately tested. Yes, GIPS is not separately tested and there is no GIPS calculation of composite or anything. So don't worry about it. There is no verification specific also discussed. So if you ask me personally, in level 2, everything that you did in level 1 is exactly same, right? In fact, I personally did not even see GIPS discussed separately. So my suggestion to the student is that don't put too much of energy in GIPS. Whatever I've covered, make that is sufficient enough, right? In fact, the CFA Institute will not ask specifically about GIPS, but it is related to performance presentation. So it might be a part of 3D. Got it, everyone? All right. Now, even though I will brush up about what is what is GIPS, what you should retain, I will discuss that. Correct. But the connection matters. Connection between what? Connection between these two, 3D and GIPS. GIPS, again, as I said, not directly tested, but a part of 3D. Standard 3D recommends. Is GIPS compulsory, guys? GIPS is compulsory? No, it is recommended. Okay, voluntary. But if they say GIPS, it should include all fee-paying discretionary portfolios, and it should be not on a specific portfolio, it should be on the entire company. So the rule is all or nothing. It should be fully compliant. And if a vignette shows misleading performance presentation, it's a standard violation of 3D. It's not a GIPS. See, understand, GIPS is, they will never ask you whether it's a violation of GIPS or not. Okay, why? Because GIPS is not compulsory. Okay, the standards, they are essential. Okay, so in exam, don't be confused that it's a GIPS violation. It's a 3D violation. Okay, everyone. So before I discuss something about level 3, what they are going to do level 3, I know it is not important for you right now, but in level 3 they are going to test in depth about GIPS, your composite construction methodologies, error correction, white time weighted rate of return and money weighted rate of return, which one is better and all. Everyone, right? Portability of performance record, this is very important. Detailed marketing requirements. I don't want to get your focus diverted, but I just wanted to tell students that how level 3 is more in depth. Level 1 was introduced, level 3 is depth, level 2 no discussion. Understood? What they did, they removed that discussion from level 2, but in level 3 it will come back. So it shouldn't be that I forget GIPS forever. No, don't do that, because you will then, hopefully you're going to go in level 3. So in that case, I don't want you to completely, miss it. So if students tell me that, sir, how do I quickly revise everything about GIPS? I don't want to study again. Number one, is it compulsory or voluntary? It is voluntary. But if you choose to be GIPS compliant, it must be on the entire company. It should not be for any specific portfolio. It is only to be done by an education company? No, by investment management firms only. The composite should include all fee-paying discretionary portfolios, not controlled by client, by the managers, right? And the definition of composite or the portfolio should not be cherry-picked. They should be assigned before what portfolios will go into a composite. What is the GIPS criteria? A total of 10 years, 5 years before applying. 5 years of past compliant history is required, and you have to continue for another 5 years. Remember one more thing. What if my company is below 5 years? Then since inception, since inception. Okay. But you have to complete the 10-year criteria. Are you getting it, everyone? Right? Correct. Verification. Verification is compulsory? No. Verification is also voluntary, but if you choose to do so, it has to be done by independent third party only. You cannot do self-verification. Verification is not compulsory, I repeat, but if you do so, it has to be done by compulsorily by third party. All right. And very important thing. What if your local law and GIPS contradict? What should I follow? Well, definitely I'll follow the local law, but you should disclose what is in conflict with GIPS. Is this clear, everyone? Correct. This is what you need to retain from your L1. Got it, everyone? Perfect. Now, guys, this section 7 is a detailed checklist. I would suggest everyone to read this individually, right? So there is nothing to be discussed here. I have very clarified what exactly goes into some of the standards. I have actually highlighted those seven issues which I feel are very frequently to be tested. This is my personal recommendation. I'm not the one who is officially for CF Institute. I can't tell you this is again what, as per the CF Institute, this is an opinion, not fact. So gift related thing which you see in two cases, 1B and 4B. Okay, in that, what are the questions that you should focus on about gift? Number one, material non-public information. In that, your focus should be, is this information material and non-public? So what are the checklists that you should do? Most of the things I've repeated, but this is a last moment summary. I want you to probably highlight this page if you just want to, once you are entering the exam, and before that, if you tell me that what should I quickly do, I don't have enough time. So 1, 2, 3, this couple of pages, these seven things are highly crucial. This is my shortlisted stuff, that what should I look into. Okay, so you will read it carefully. Performance presentation, as I said, in this benchmark, gross, net, what returns, this is your last moment summary. Okay, and no escape. I would want you to read this, because if you only read this, I'm not saying this is an alternate to everything, but just before entering the exam, you don't have time to go through all the pages. So 1, 2, 3, this should be enough for you for last moment. Okay, suitability is very favorite of mine, because in level 3 I've seen many of the case studies focusing on suitability. Standard 3, loyalty, prudence and care. Then you have what, fair dealing, and third, 3C is suitability. Okay, everyone. Next is conflict of interest. In this case, as I mentioned, in conflict of interest, they have renamed this. So avoid and disclosure, what exactly you should look at, that is very clarified. Read that as well. Supervisors, responsibility of supervisors, this is very tested, right? Because as I said, their intention is that you are a senior manager. So did you do your job properly? Did you take action properly or not? And for duties to employers, because we all are now senior employers, we employees, we will change jobs. So what you should do with regards to that, very clearly specified. Again, most of the things are similar to L1, but these seven things I've highlighted because they are very frequently tested as per me, and there are a couple of things which are different in L2. So read this couple of pages for sure before you hit the exam. Okay, now, uh, many times the line is blur between whether it's a violation or not. Again, the strategy is that it depends on the question and the choices. Correct? So, what exactly is clearly a violation and what exactly is not a violation, and where is the confusion? So, I have actually come up with this 766 strategy. Again, there can be more. What is this 766 strategy? In this, I have clearly mentioned, as per me, what is not a violation, what is definitely a violation, no compromise in that. And then there is some confusion, right? What is the confusion? Confusion is not whether it's a violation or not. That alone is not a confusion. Confusion is that two standards contradicting. Have you not noticed that? Right? So those also I will discuss. So quickly, you guys can tell me, and then I have something for everyone to test. I have everyone will answer whether it's a violation or not. So it's like a summary of what is definitely a violation, and everyone will tell me if they have any doubt. Number one, a blanket restriction on any trades when you are having any important information. Is this a violation? We are discussing non-violations. So this is not a violation. Now, some people would say that that will provide a signal to the others. Still, it's not a violation, right? So I will make it cut short that all the employees will not trade. That's not a violation. Different levels of services, we already said it's not a violation, provided you disclose that. Isn't it? See, provided you disclose that. Changes in recommendation also not a violation again, but that should be independent. It should not be influenced or forced by investment bankers. See the but. Okay, that is very important. But this, but that. Okay. Supervisor is unaware of the subordinates misconduct, right? That again is not a violation. However, once you come across, you should do it promptly and put restriction and take appropriate action. If you not take action, that's a violation. Member receives a nominal gift violation? No, but you should, to avoid that issue, you should make sure that it is not compromising your independence and objectivity and disclose it, isn't it? Research analyst publishes accurate analysis of a stock, right? And the stock price goes up. Is that a violation? No, not at all a violation. There's no need to disclose, isn't it? Portfolio managers abstains from voting. Guys, proxy voting is not compulsory. You have to see the cost benefit analysis, right? But you have to disclose why you're not voting. Is it against the clients need to know, is it against them or not? So, disclosure of not voting, probably the reason should be that the cost is more than the benefit, right? So, that disclosure is essential. Not voting is not a violation. Clear, everyone? Now, we'll discuss on what is a no compromise, means that is clearly a violation. My request to the class would be that can you also tell me the number just for fun between us, right? Like it's not something that it's going to be asked in exam, but just for our reference. So all these 6 cases, I want everyone to try and tell me which standard, okay? Right? Trading on material non-public information, clearly a violation, standard 2 to A. Very good. Front running client trades, regardless whether the client is ultimate benefit. Front running. Can someone tell me? It's related to what? It's related to 2B? No, it's not only about market manipulation. Front running is about priority of transaction. Yes, you can say it market manipulation also, but here it is specifically more related to priority of transaction. I'll repeat, yes, you can say market manipulation, but more specifically about priority of transactions. Misrepresentation or guaranteeing of specific returns. See, misrepresentation is 1C, but guaranteeing is 1C also, and I will say 1D also. This is misrepresentation and manipulation. You're trying to manipulate, but misrepresentation to all is market manipulation. Got it? Everyone? Revealing CFA exam content is a violation of 7A, right? 7B is about how you refer. Failing to disclose material conflict to the employer and the clients, right? Everyone, this will be under which case? Failing to disclose conflict of interest? No, this should be under 6A, right? Avoid and disclose. 6A, avoid and disclose. This becomes a part of 6A. It is not specific to client only. It is a part of avoid and disclose. So I know it is similar. That is where I've put up this thing also, that what are the, standards which are similar, right? Or which can be probably put up into both. Understand this classic 6 case. And I'm sure you can relate that. Number one, 1B and 6A, which we just saw. 1B is, why everyone gave different answer for this, the previous question. 1B is about independence and objectivity. Don't take any gift, right? 6A tells us to disclose and if possible, avoid it, right? Why? Because if you don't do that, it will compromise your independence and objectivity. So guys, when I'm taking a gift and not disclosing it, right? Is it a violation of 1B or 6A or both? It's violation of both, isn't it? It's a violation of both. But CFA Institute will definitely make it more specific. So if I'm receiving a lavish gift and not disclosing it, so taking a lavish gift is itself a violation of 1B, isn't it? Clearly, right? receiving it without disclosing, then it is 6A. Now, even if you receive a nominal amount, right, you might not be violating 1B, but not disclosing it will violate 6A. Understood? So it's better you do both. You avoid it, and if it is within the criteria, you take it but disclose it. So again, these two are sometimes affected together and sometimes they are independently violation. Understood the similarity and differences? Correct. I'm actually doing what I'm clarifying where there are commonalities. Okay. 3A and 3B. See, 3A is what? 3A is loyalty, prudence, and care, right? 3B is fair dealing. Now, what is the problem? When you do a soft dollar abuse, soft dollar abuse means you do the client brokerage that you got for client A, you are using it for other clients. Now, that is again not fair dealing, isn't it? Because that's a violation of loyalty also for that client, and you doing it for others or for your benefit. That's a violation of both. Giving one client advantage over other is a violation of 3B, and soft dollar abuse specifically for that client is a violation of 3A. So you see how both can be affected. Everyone clear? Very thin line between. This is my personal observation. The CFA Institute hasn't mentioned anything about that these are similar differences, but I this is what I believe. Okay, everyone that I came across and with the students out. I am sure many of you must also be facing similar confusions. Got it? Next, 4A and 3A. What does 4A talk about? Loyalty to employer and loyalty to client. Now, this is very easy, right? Because the hierarchy is what? Market, overall market, then integrity of capital markets, then client, then employer, and then personal interests. So if you come across any situation where employer and client both are at contradictory, remember client is priority. So that is a more important violation. Got it? So if you have to choose between one, make sure client is not violated. Client's loyalty is not violated. 3A is not violated. Okay. 5A and 3D. 5A is what? Reasonable basis, right? Investment analysis, diligence, and reasonable basis. So you should do thorough research. And while doing so, you should not do 3D. 3D is what? Performance presentation, isn't it? So you do thorough research recommendation. Your research recommendation has reasonable basis, but your performance presentation should not be inaccurate. It should be not cherry picked. This issue, especially with regards to third party, if you're using third party research without scrutinizing, that is a violation of what? 5. But if you're excluding a portfolio, that is a violation of 3D. Okay. So clearly differentiate between what is a violation of 5A and what is a violation of 3D. Not disclosing performance inputs is a violation of 3D. Some students get confused, sir. Isn't it misrepresentation? See, misrepresentation is when you're misselling something, okay, or when you're covering the information or hiding. But for performance specifically, we have a separate standard. So it is better you conduct with that standard, okay? Now, I have already discussed with everyone that a very common confusion for student is 1B and 4B. Now I'm sure my student is very clear about that. What is difference between 1B and 4B? 1B is about past gift, correct? And 4B is about additional compensation. Which one should be disclosed and which one needs consent? Everyone in the class? 1B needs to be disclosed. And for 4B, you need permission. You need written consent from all the stakeholders. Is that clear, everyone? Right? Third party fee, which will compromise any third party who's going to pay you fee for recommending the product, that will be a violation under both. If a third party, not your employer. So disclosure, yes, is important, but that is not sufficient in case if it is 4B. If it is 4B, disclosure is not sufficient, consent is needed. Clear, everyone? Check, confirm, right? And then finally, the similarity or difference between 2A and 2B. See, 2A is using material non-public information. So now, see this. I have got a secret information, confidential information. I use it and I try to, bring influence into the market. So here I'm violating both material non-public information, and distorting the price is also a violation of 2B. But there are two violations here: information based manipulation and action based manipulation. Information based manipulation is when you're using the information or passing on the information. That is information by based manipulation. But trading based manipulation is your action. Sometimes they both can be different also. Both can be different means I didn't get any information, but I'm trying to rig the prices. That's a market manipulation, isn't it? Second, I got a tip from someone, and but I did not rig the prices. I just did it for the benefit of my client. Then that's a violation of 2A, material non-public. Understood? So I've given an example: tip from CEO and trading on it. Tip from CFO and trading on it. Now, this is definitely a violation of 2A, correct? 2A. But is it a violation of 2B? Am I rigging the prices of the market? No. Correct? So it's not a violation of 2B. Fake orders, right? That is a violation of 2B, may not be a violation of 2A. So everything that is 2A is not 2B and vice versa. Got it, everyone? Clear? Right? Okay. Again, this page is my personal recommendation. Under this section, I would want you to just go through once. The first four that you see here are, as per me, highly tested in level 2. This is again my personal opinion. I have to put so much of disclosure. Oh my God. So just because it is recorded. So I have become so ethical that I don't know what to say. Sometimes too much of ethical costs you so much of business, right? And now someone will say, yes, in the short run, but in the long run, it is good. I understand, but in the long run, everyone is dead. So, anyways, did I tell you what happened with me recently from ethics? I will just share you one thing. One of the student, he emailed me something. I don't want to reveal the name. That guy is giving exam. Okay. Now he revealed me, you know what? He emailed me that, sir, I have seen one of your video where he actually did, you know what, from my video, like the news agencies, what they do, they pick up some word from between and then they make a story. So I have said that so suppose if I say that I expect highly testable in exam. Now, what if you remove I expect from it? And then if you put up that clip and then you say that, he said expected in exam, or he said in exam. So, like a typical news agency, the guy actually pulled out my information from my YouTube video and he said, sir, I'm a big fan of yours. I have passed my level 1 exam because of you. Until that, it was all okay. And then he pointed out my YouTube video and he said, in your one of your video, you have said this. So it's a violation of this. So until that, I was reading, okay, fine. And then below that, he said that I am doing a favor to you by not mentioning this to the institute. Okay. So here are your choices. I would suggest I'm doing better for you so that you don't get a violation because of the words said by you. But in return, I need, if you can do, and it's my humble request. He says that it's my request if you can give me discount for your level 2. And I said, really? What is this? This is blackmail, right? So then he clearly mentioned me, sir, I am doing this so that you are in compliance and no one puts a complaint on you. And sir, I need the discount. Okay. Now, trust me, this guy, I checked his background. He is giving CFA exam. Now, the problem is that my video, if you just see from between, it will look like, yes, I am telling this will come in exam. Now, I that common sense I have, right? Now, what is the conclusion? Can I tell you what happened after that? He emailed me that on, let's say, 11th of that date. On 12th, I get an email from CFA Institute. Can you believe it? And CFA Institute has told me that this is what we've got a complaint. And CFA Institute, first time in my life, the CFA Institute, conducts an inquiry. They ask me for all the document. They pull out all my marketing material from the past. I don't know. It's like an FBI doing the inquiry. So in one of my marketing material, by mistake, one of my IT IT guy had put something because he was not from the English background. So he wrote some words which were inaccurate. So CFA Institute pulled out all of that and they said, this is the issue. So I addressed that. They spoke personally to my marketing guy, right? He didn't even knew English. So they directly got in touch with him via email, or I don't know how they contacted him. I think they contacted via email and they asked all the clarification. And after that, I got an email by the CF Institute that there is no action, but next time be careful about your marketing material or what you speak. Now, trust me, I still can actually go to the CFA Institute and report that student's name that, okay, you did my thorough analysis. Now, this is the case. Okay. Now, the student will be debarred from giving the exam. So I was so much angry. I thought that I should do this. But then I realized two things. One thing is that if you don't teach such people lesson, these people will tomorrow become CFA, fund manager somewhere, and they will do the same thing. Or they might be, blackmailing some women, blackmailing someone in their relationship, blackmailing someone in their work. These guys will be the jerks in the future. Absolutely, right? So I'm very tempted to stop it, but at the other end, my professor in me tells me, leave it. Okay. The, I am personally in a dilemma. Should I report? Now, most of you guys will say that you should report it. But behind the scene, I feel, most of the businessmen will do what? They will try to avoid all this issue because CFA Institute will also do what? They will ask me, who's this? What is that issue? Where is that video? What is the issue? Already, a couple of my videos from CFA level 1 have been pulled out by someone. I don't know why from the YouTube, just because maybe there's a big, issue going behind the scene with competitors, cross posting. You guys have no idea about, and I don't want to discuss, but I just want to say that behind the scene, they cross post on social media, they write wrong things on social media. The day I saw all of this, I decided no need of marketing. Let student join if they want to join. But all of these things are happening. And I will tell you, this is not the only email. There are several such things. Okay, that happens. I have one of the lady. She said we used to first deliver physical books. Okay, so if the physical book was manufactured in Mumbai and it was delivered across India, and such a big country, it's difficult to deliver at this respective pin code if it is very much in the outskirts. Okay, so I got a message on my LinkedIn by a student saying that if I don't get the book in this day, or if I don't get a refund, I will put on social media this. And I said, okay, really? Go ahead, do it. So, see, some of the students have this habit also. Now, what to do? This is unfortunate things, right? But this happens because, see, we build a brand for years. We build up our what is reality. But on social media these days, if you put some wrong thing about someone, people will not verify whether it is accurate or not. They'll start making comment on it. Okay, so people like us who build our professionalism in years of hard work, right? And you just put a blame and run away, right, from an anonymous account, and that can completely ruin your career. You are not going to be, it's going to be difficult justifying everyone. Unfortunately, all this is happening behind the scene by our CFA candidates, and this is very disheartening. So what I did as a policy, when I come across students who want to join the course, but if I see there is some issue with that, right? I clearly tell students, don't join, because I'm not going to be able to do what you are asking me. Initially, you know what, there were days where we wanted business, so we accepted everything, right? Now, why? Now I'm not in that position, happily. So I tell students, if you are doubting, if you have this requirement, that requirement, if you need any special behavior, if you want anything special from us, no, nothing special. It will be similar, or don't join. Some students find it very offensive, but you have to be very clear, especially in the business, which the CFA Institute is a watchdog also. And I think ethics has changed in me a lot of things, right? Anyway, so these are my important stuff. You can go through that. This is just for your reference. This is not something, this is something that I believe is very, very key thing for your. Now, I will do this discussion where you guys can just say violation or not, and some things you can input. This is a task, but this is something I'll keep it at the end because I put some couple of questions. The last summary, this is something that you can just see before you go for the exam, apart from the other inputs that I've mentioned, right? Remember in L2, what is difference? As I said, when is the issue done? When is the activity done? That is very crucial in level 2, right? Could not or did not. Okay. So see, sometimes what you could do and what you actually did, there is a difference. For example, w- one be asked whether independence could be compromised or whether it is actually compromised. So what is more complex? It could be compromised. So if it could be compromised, it should be avoided. Okay. All three parties conflict disclosure must go to employer and both the clients, existing as well as potential. That disclosure or even consent sometimes has to be to all the stakeholders. Total portfolio context with respect to suitability, you don't have to see in isolation, you have to see from the total portfolio point of view whether it is meeting the overall risk and return objectives. And mosaic test, this is what I wanted to highlight. Mosaic test is, this is a very blur line between material non-public and mosaic information. So make sure the information is either non-material non-public or material non-public. Okay, right? About GIPS, as I said, GIPS is probably not tested, right? I'm very tempted to say actually not tested, but I have used probably, you know why. But GIPS knowledge is enough, whatever we just discussed, and it might be tested within standard 3D. Okay, so guys, now you can also say what, sir, you said GIPS is not tested. You can put that like our media, cut out that, edit it, use AI, and publish it. The world has become so dangerous, isn't it? Everyone. Obligation hierarchy. As I said, this hierarchy is so important. Number one, capital market, then comes client, then employers, and finally your personal interest. Okay. And the last thing I've done, as soon as you see the vignette, first thing is what? You will hit the 4 questions. This is a 60-second strategy. Okay. First, go to the question and then highlight the characters, the roles. And as soon as you read, if you come across any violation, underline that. Underline that. Key things, as I said, independence, objectivity, material non-public, soft dollars, suitability, disclosure, avoidance of disclosure, supervision. All these are commonly tested in level 2. Check timing. When was it done? And as I said, CFA Institute will club non-violations with violations. So clearly separate them, and sometimes it will be bundled up together, right? And whenever confused between whose priority should be taken care, market, client, employer, and personal interest. MCEP. That should be the closing point, correct? And I will tell you one secret to tackle ethics. That secret I will tell you after we solve all these one by one. Okay. So, guys, you can tell me and I will write down. Okay. Everyone in the class, all of the students can quickly tell me whether it's a violation or not. See, there is a blur line also, but I've put up these 20-30 scenarios where you have to tell me whether it's a violation or not. And sometimes I've put multiple standards. So you have to tell me whether it's a violation of both or not. Okay. Number one, Analyst upgrades stock after investment banking pressure, independence and objectivity, and 6A. 6A is what about? Everyone, what is 6A? Come on, everyone. What is 6A? Avoid or disclose. Violation of one or both. Everyone. Violation of one or both. One or both. Everyone, check, check, check. Yes. Guys, don't only say violation if there are two, say one or both. Both, right? Both. Why? Because my investment banker is having a position in that, right? Even that has to be disclosed, isn't it? It's a violation of both. Got it? You have to disclose also that. Clear? Analyst upgrades the stock after rerunning DCF on a new public data. Is it a violation? No, not a violation. Okay, I will write N. Got it? Portfolio manager receives 5-day all expense trip from covered company. Everyone, violation. Even though you will do it, I know, but still violation. Okay. Next, portfolio manager receives branded calendar and pen from a client. Hmm. Not a violation, right? But guys, I work with a company and today I want to say it publicly. I don't care about it. To hell with violation. I work with a company called DNB, Dalal and Brocha. And my previous boss there, who's right now also managing funds, a very unethical guy, he used to force the employees that why did you take the sweets? And which employees, those who are dealing every day with the poor employees, those who are dealing with the asset management companies, regulation, filing, peon type of employees. And he used to tell them, why are you taking their sweets and all? Give it to me. Can you believe it? And this guy is right now a very big fund manager. And his son also was doing CFA and he did CFA with me level one. And I openly say because it's a torture what he's doing and he's still doing it. And when such people reach at big level, I don't have hesitation to say it. I have seen him actually going to the desk and yelling at employees. And he was not a CEO, he was just one of the head of the company. And he was going to those poor employees and saying, why are you taking sweets? Why are you taking calendar? Why are you taking this? Give it to me. And he used to take all and go to his home, everyone's gift. This is the guy. This type of people are there in our industry, right? You need to call out these guys because today or tomorrow they'll be managing your funds or your client's funds. I want this lecture to reach to him. CFO tells analyst privately, we will miss estimates by 40%. Everyone, violation or not? Violation of 2A, material non-public. Check, check, check. Violation, everyone, right? Okay. Analyst factory visits plus public reports, slow down conclusion. Guys, this is a part of violation or not? It's a mosaic, right? Everyone, it's not a violation. Clear? Analyst tips a friend and friend trades. Come on, this is clearly a violation. Everyone, 2A, violation. You tipping a friend is a violation, right? Correct? Previous one, it's only telling. Is it a violation? Which one? Which one? CFO tells analyst privately, we will miss estimates. Is it not material? It's material and non-public. If it's a material and non-public, both is a violation. Correct? We will miss estimates, he's saying. He's not saying we'll miss the flight. That's clearly a violation.
Yeah, sir,
Huh.
but he's not taking any action on it, but it's just a statement, right?
So sharing the information is a violation, isn't it? Now, he is not taking action. The analysts who are listening, what if they take an action?
Okay.
Clear? See,
Okay.
CFO is his job is to control all this information. He cannot reveal some information to a selected people, especially analyst who is going to take position. Clear? He should never say such things. All right? Correct. In fact, you know what I will tell you? Most of the fund managers should not come on social media regularly. I will tell you, I don't know whether I've mentioned this or not. One of the India's biggest fund managers that was during our era. I think I mentioned about it. Prashant Jain, HDFC's fund manager. You must have never heard him on any social media. The best thing is avoid social media if you are a fund manager, because every word that you say is going to be a big impact. You never know when your normal conversation will become a material non-public. So fund managers are not allowed to come on podcast. Block trade fills assigned to favored clients after execution. Everyone, this is clearly a violation, isn't it, everyone? Portfolio manager executes unsolicited, unsuitable trade without client discussion. Portfolio manager evaluates bond purchase without considering client's portfolio. Both of these are violations under standard 3C, suitability. Now, this is important because there are two things you have to mention. Okay. Backtested returns presented alongside actual returns with labels. This is a violation of 1CE. That is 1C is what? I've got a question. Wait, I'm a bit confused about the branded pen gift. If it is valuable gift, where did we discuss about branded pen gift? Where is that discussed? Branded pen gift. Portfolio manager receives branded calendar and pen from a client. Branded calendar and pen from a client. See, is it directly a violation? No. Again, it depends also on what you will check, whether it is under the criteria, whether it is branded or not. It should be within the budget. If the company has set up a budget, how come this is a violation? This is not a violation, right? Is it going to compromise your independence and objectivity? Then it is a violation. Okay, then it is a violation. See, understand one thing, clients do give gift. They can give any food items, they can give any items, right? Right. So, but again, if it is too high, a lavish gift, a lavish treatment, branded pen and calendar, most of things are branded these days, right? Okay. Now, again, if it is going to influence you, then you don't take it. Understood? I'm not going to get influenced by you giving me a pen or a calendar, definitely. Even if it's a big gift, I will not get influenced. But least for a pen and this, that does mean you're going to give me gift, right? So that definitely is not going to compromise my independence and objectivity. I could be influenced by, oh yeah, see, Gucci or Dior pen, really? That is definitely. Yes, I agree. I agree. See, some people can only be influenced by giving them flower or sweets, right? So you can't calculate influence on that basis. Backtested results. Okay, guys. Yes, this is a violation of 1C, misrepresentation or performance presentation or both. Everyone in the class, it's a violation of both. Am I correct? Right? Next, terminated accounts excluded from fire composite. Excluded. See, when you are excluding it, your intention is also wrong. And most of the time, whenever there is a performance related misrepresentation, it's a violation of both the standards, isn't it? Isn't it? Or wait a minute. Is it a violation of both? Terminated accounts excluded from fire composite. Fire composite. Can someone tell me, is it a violation of both? Yes or no? Correct. Why is it a violation of both? Because your intention and your action both are violated. Got it? Analyst forwards third party reports to clients without reviewing it. Definitely a violation of 5A investment analysis, right? Member copies client database to personal device before resigning. Loyalty, again a violation, correct? Members remembers from memory names of former clients after leaving. Is it a violation, everyone in the class? Not a violation. Got it, everyone? Quickly, supervisor unaware of violation, adequate procedures existed. If there were adequate procedure existed and he was unaware, not a violation, right? But check this, supervisor sees red flags of trading irregularities and takes no action is a violation. Analyst, this is very important. Analyst owns shares in companies, discloses prominently in research. Is it a violation or not, everyone? It is not a violation. Analyst owns shares in company, publishes upgrade without disclosure, definitely a violation, isn't it? Members reveal CFA exam question to a study group peer. That will not happen in our case, right? Most of our WhatsApp groups, I don't let people chat because in the past, when I opened the chat, oh my God, it was a disaster. No need. If you want to chat, do it personally, not on the group. I see promotion of political influence, what not, right? No, the best democracy is controlled democracy. Disclosure, it's a joke, okay? Members reveal CFA exam question to a study group peer. Yes, violation, definitely a violation. Try doing that, right? Next, research report moves stock 12% up on the publication of accurate analysis. What is my problem in this, right? It's not a violation at all. I wish that happens. Firm uses client brokerage, that is soft dollar commission, to buy office furniture. Violation. Different services tier charge disclosed to all the clients. If it is disclosed, not a violation, right? See, the answers are faster because everyone wants to wrap up, right? Member accepts performance-based bonus from client without written consent. Everyone is a violation, right? Analyst changes recommendation, investment bank's client is pleased. He changes the recommendation and the investment bank's client is pleased. Is it a violation? Guys, this is not a violation. Let him dance. Why should I be worried? Is it a violation? No. But what if I flip the statement? To make the investment banker client please, I change the recommendation. Then it's a violation. In this case, it's not a violation. I have changed my recommendation. Let him do what he wants, right? How come that's my violation? But if I flip the statement, then it is clear. So your diligence and reasonable basis is important. Got it, everyone? Independence objectivity. Spoofing, placing large orders with the intent to move the price is definitely a violation. And next, proxy vote. You haven't casted the proxy vote. Documented analysis showed cost exceed the benefit. Since the cost is higher and you did not do the proxy voting, that is a non-violation. Clear, everyone? Client requests risky trade, portfolio manager updates IPS and executes after discussion. Is it a violation? No. One of the requirement was you need to update the IPS and then you trade, not a violation. Clear, everyone? And now comes my final tip. My final tip is very crucial. At any point you are confused whether it's a violation or not, think that what your mother would have told you, right? So whatever, if you think your mother would have been at that position, not mother-in-law, okay, only if your mother was in that position, what she would have said, that should be your secret weapon. Understood? Because mothers are never wrong, correct? So everyone clear? This should be our last secret. This is my personal recommendation. If you're confused, what should I do? I still do it. Whenever I am confused, I ask my mother. So you can also do that thing, right? That will be our final solution in case if you are confused. I hope you have got the clarity to some extent about what is the differential part in level 2 with respect to level 1. But again, you will go through the level 1 syllabus, which I've put up same, right? Then do couple of vignettes that we've solved. Then read this important points, especially the important points that I've highlighted in the later sections. Just read that once. Reading is very crucial. I know a lot of you might be tempted not to read everything. So that's why the differential part I've put up, at least read that, right? And then again hit the questions and then see the difference. I think it will be much easier to tackle. Got it? Ethics is something that you can do at any time during the CFA curriculum. You don't have to specifically do it only at the last, but I recommend it to be the last because there are other priorities in level 2 compared to ethics. Okay, but nonetheless, you will give importance to ethics because CFA Institute does, for them, it's a no compromise topic. I hope you've understood, like the session. But again, after all this thing, do as many CFA Institute case studies. Why? Because of the language, the words that they use. My personal suggestion is do not use a lot of other ethics questions which you get it from online or other institute. With all due respect to all the institute, in ethics, the wordings matter, right? So don't do a lot of things and confuse yourself. The CFA Institute has put around 17, I think, LES questions. We've done a couple of them here, and then you do it on the mock also. So in the mock also, you will get around total two mocks, 6 at least. I would suggest you to do at least that, right? So that you are used to the language that they use in the exam. Clear, everyone? Perfect. Got it? Okay, thank you.